All right, everything looking good on my end. Let's get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, the 28th of July, 2021 at 8 p.m. Eastern Standard Time. And before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So let's jump in, and we're going to take a quick look at the 10-year yield and bonds. The DXY, we're going to talk a little bit about Fed Chair Jay Powell and what he had to say, and not just what he actually said, but what it means, because some important things I think came up in this meeting. So the 10-year Treasury yield overall responded decent. It's just hanging on to the same level, and we know obviously we came down and tagged our 0.5, which is just the move up from the bottom of the range to the top of the range, the bottom of the range being the sell-off back in March when we had the big crash last year. We have come down 50% of that move, or back to the 50% of that move, basically from our top to our bottom, retraced up here, came back to the 50% mark. And then also if we take another Fibonacci on the shorter time frame and just do from the bottom of the range to the top of the range here, we'll see that we're basically at the 236 of that move right there. So we could come back down as low as our 382, and that would put us right in line with our longer term Fibonacci, which is what we're paying attention to in red right here. So pull back to the 236 of the larger move, the entire move, would be our blue target here. So it is still possible that rates would drop down as low as just under 1%. But at this point in time, we are holding strong right here at the heart line of the channel. So as far as I'm concerned, nothing much changed right here. But I do see quite a bit of strength in bonds. Now, I'm not convinced that we're going to get some massive move or anything like a lot of people are talking. I think it's more of like a fear trade or like a safety trade. So let's see how that's affecting our actual rates and why that's so important. So obviously this was the inverse spike. So when yields went to basically zero and the Fed set the funds rate at essentially zero, we went absolutely parabolic on bond prices. This is the TLT 20-year, and these treasuries basically went through the roof and then have been selling off consistently throughout that entire time. They bottomed out here in March, basically 1 year from when they actually absolutely went parabolic to when they absolutely like hit the bottom right here, which corresponds with some other key areas. From that point, we started bouncing. That obviously corresponds with the yields topping out as well. So during that 1 year period, it's important we keep in mind that the Federal Reserve has been buying $120 billion per month worth of bonds, mortgage-backed securities combined. So 80 billion in treasuries basically a month minimum, and 40 billion a month in mortgage-backed securities. So that has fueled the housing market, because obviously, if there's a massive demand for an extra $40 billion in treasuries, that's going to drive up prices. Meanwhile, there's also a lack of actual houses on the market, so that helps to drive up prices. And then also, if you look at the bonds themselves, if there's all this basically deflation taking place in bond prices are going back to where they are. They're right back to where they were before all this was going on. Around December, you can tell the bond market sniffed something out. So this started happening in, basically December of 2019 or January of 2020. The bond prices started going up, and then they went absolutely parabolic once it was like official in March. Once everything was going on, they crashed down immediately, and then they bounced straight back up. So what does that tell you? It tells you the bond market was already sniffing something out ahead of time. That was our canary in the coal mine, and I use that term a lot, but that's what we're looking for. We're looking for signals for what the market is going to do and what smart money sees happening, and then we're going to figure out why and how we can position ourselves to make money off that. So again, we see the same situation happening now, where we're coming back up to those elevated levels as expected. This was obviously all expected, and this is potentially putting in our right shoulder here. Now, what we're paying attention to is, do we go up higher than this 0.5 up to the 618 and the top of our channel, or do we top out right here? So the most important thing to do is just zoom out and look at this whole chart, because when we zoom out, it becomes so much more evident what's taking place right now. We basically have, going back to 2002, bonds have been in a parabolic uptrend. They've been literally just going through the roof. We've been operating inside of this channel throughout that time, and we found clear resistance at the heart line and support at the heart line many, many times along the way. And now here we're just bouncing that support, okay? So the real question is, are we going to continue back up to the top of the range and then burst out the top and go absolutely parabolic? You know, that would have to basically mean rates would have to basically go to zero, and there's just a never-ending, just massive demand for bonds, at which point in time the Fed would basically have to respond by stopping. They would have to taper their bond purchases or start to unload bonds if bond prices just went absolutely parabolic. So I think that that's less likely. I think it's more likely that we just continue to operate inside this range and that this stab out of the top was more of an anomaly. Now, it is possible, but what we're seeing here is our monthly chart is getting ready to end. We have basically less than 2 days left, and it looks to me like what happened was we came up here, tried to get up to the 0.5 of the sell-off from the top to the bottom of the range, and it looks like we're getting rejected at the 382. So more likely than us continuing up here right now, if nothing changed in the next day and a half, 2 days, whatever, and this monthly ends, I would say more likely than not, we will sell back off to the 236 to around like $143 mark. We'll see a bounce in bond treasury yields and a decrease in prices. And then we'll see if this 236 holds. And then we can make our way back up to the 0.5 and hit our target up here of the right shoulder. Now, it's of course possible that we sell off here and this fails at the 236 and we come back down to the neckline, in which case we got to pay attention to the actual neckline of the head and shoulders and see, does it look like that's going to break? And then we're going to start hitting our targets to the downside. What I see on this bond chart is, obviously we topped out inside the bullish control zone back here when it went absolutely parabolic. The Fed has been buying bonds this whole time, and we've still been massively selling off. And only now, with the extra $80 billion worth of Fed bonds purchases for the last 2 months, have we been going up. So we've literally been reflating the balloon, and we're finally starting to see the balloon fill back up. Before, they were just, it was still just bleeding out. The hole in the balloon was bigger than the amount of air the Fed is able to put in it. It was leaking faster than it was filling up. Now we've just started to see the balloon get a little bit bigger again, and now we have to pay attention because we have the hard sell signal. We have all these red histograms. We're below the slope line and about to lose it. And if we look at the other times when that took place, we got basically a very similar signature right here. We came through the heart line, came up and put in essentially a left shoulder, a neckline, a head at the top of the range, came back down and tagged a sort of diagonal neckline, put in a weak right shoulder, and then we sold off through the heart line substantially. Here we put in basically just a top over a 2-month period. We came from almost the bottom of the range to the top of the range, bearish engulfing candle, held the heart line, and then sold off all the way back down to the bottom. Here we put in a double top, basically, you know, one peak here, heart line, holds for a little while, second peak at the exact same level, holds for a little while, and then finally we break back down. Now you'll see I have put in like basically a green parabola here to try to estimate where we'll come back down to when we break this neckline. As you can see, the parabola is by monthly candle closes and tags all these along the way, including our one back here from December of 2018. So is this going to be like a scientific exact area where it's going to come down to? No, but it'll at least give us an idea. And I think that it's more likely that we would do something like that versus getting all the way back down to like the bottom of you know, our channel that we're operating inside of. Does not mean it's not possible. Does not mean we have to come down to my target of like 128, but I think it's highly likely that we would. So based on what we're seeing here, you know, essentially when we got the hard sell signal through this range, we had the knife stabbing up through the top right here. You know, we came all the way back down to the bottom of the range. Once we flipped that slope over red, entered inside the bearish control zone, got the hard sell signal, got rejected. So then the next move we got, came up to the top. We basically put in that head and shoulders, which is a very similar signature to what we have now. We got the hard sell signal. After we got the hard sell signal, we eventually came down below the slope line and flipped it over red. We got a bounce back up off that neckline, and then we came all the way down almost to the bottom of the range. And you'll see we had all red histograms right here, and then we got green on the basically entered into the bearish control zone. Now, if we look at when that was taking place, that was December of 2013. So if we look at what did this, you know, basically how did this correspond with what's happening now? We went absolutely parabolic, sold off below the slope line. We have not flipped the slope line over red yet. We are also very close to entering into the bearish control zone. So we're, you know, we're basically at a point now where we either invalidate this or we sell off violently. So that's what we're paying attention to. We're going to see what happens. but a rejection at the 382 makes me think that we're more likely to at least come back down and retest the 236, and at that point in time we can make an accurate judgment if that holds. So the monthly is telling us that we're bearish, but we're potentially starting to like bottom out this area, obviously, after a couple months worth of strong moves to the upside. If we go to the weekly chart, what does that tell us? Well, it tells us we were inside the bearish control zone. We got the hard buy signal. We bounced the hard line as expected. Bunch of green histograms. We're above the slope line. We're inside the bullish control zone, starting to roll over. So this is overall, I would say, bullish. But realistically, we need to see what happens here. You know, are we going to get rejected? Are we going to come back down? Or are we just going to find support at a higher level? We could easily see continuation as well. This situation, if we go back to, once again, our little head and shoulders pattern here, now on the weekly, we'll see once we crossed above the slope line, we came back down and retested it here, but we didn't burst through it with as much power. So when we retested it, came back up, flipped it over green and or blue, and entered into a nice parabolic uptrend to the upside. So we need to see, are we right here, a situation like this? Because that's what I think is taking place right now. I think we're in a situation like this, where we're basically getting the reflex rally off the powerful sell-off. We come back up and basically test the slope line, but fail to flip it back over, and then we sell back off. Now we have to wait and see. We are above the slope line now, so it's possible we just continue up here. But I think more realistically, we would probably roll back over and then see, does it hold? So again, we're at a decisive, deciding point in the market where it could go either way. And then obviously, if we look at our shortest time frame, the daily, we're basically just kind of hanging out at the top of the range. We've had a nice blue slope this entire time. You know, we're seeing essentially some weakness, but overall strength in the market here. And again, this corresponds with what's going on. People are worried. People were expecting possible taper talk, afraid of what the Fed was going to do, how it was going to affect markets, etc. So, is the bond market telling us right now that there's something to pay attention to? Yes, it's telling us, I think, in my opinion, it's telling us that people are starting to get worried. Smart money, old money, institutional money is starting to get a little worried, but they're not sure if their concerns are legitimate yet. At the time, it was, oh, it's inflation. Then it was like, oh, are we going to get, another round of, and that's going to be a problem. Our market's overinflated. Like, there's all these different concerns, and the bond play is like the safety trade, in my opinion. So that's what I'm seeing over here. Obviously, we can look at the DXY, and we'll see some important stuff happen, on the DXY. Depending on how you were looking at this, whether you were looking at this as a channel or whether you were looking at this as a wedge, it's safe to say that we have basically broken down from that channel. It was showing some bearish divergence. It was showing some bullish divergence. We have had a powerful move to the upside. I don't think this changes the overall structure of the market, but it definitely looks like we're finally going to get, that sell-off, at least come down and test some of these key levels. What we need to pay attention to is, where do we find support at? Do we find support at the 200 exponential or the 200 simple down here? We really have to pay attention to that. Do we come all the way down here and just put in another in our series of higher lows? Any one of those is acceptable. If we start to break through the low down here or the low right here, then I would get extremely bearish on the dollar. But as far as I'm concerned right now, I think we've just been consolidating at resistance for, basically, let's look at this. We're basically consolidating at some key resistances for, the last week or so, essentially, eating through the sell orders. And now we're seeing a little bit of weakness here. Are we going to come back down here, find some support and move back up? Or is the resistance just too strong? We'll have to wait and see. My bias is still that, before we can ever have a massive, deflationary or weakness in the dollar from where it's at right now, we have to see it strengthen, as people will need dollars to settle their debts. Is that going to be the case? We'll have to wait and see. We never know for sure in the markets, but we do have our invalidation levels in mind just in case. So, but that being said, now that we've taken a look at what we've seen in response to, basically that Fed meeting, I want to pay attention to a couple of things that Powell said today, and basically what they mean. So I took a couple notes during his little meeting today. Overall, I highly recommend you watch it. It was only about an hour with the Q&A, or I think about 20 minutes just listening to his statements. And you could tell a lot. He was once again just reading off of his pre-written notes saying the same things he's been saying this whole time. But there was a couple important things. So we'll just run down my little bullet points here. He said, once again, we have an extremely strong labor market, typically, or a tight labor market, meaning that there's, tons of people who need jobs and that Americans want to work, but that there's something getting in the way of them coming back to work. And we'll come back to that here shortly. But overall, he's saying we have a strong economy and a strong labor market and huge demand for labor, which explains all these unfilled positions, but there's a couple factors why we're not able to fill those conditions in this extremely tight labor market. One of the things he specifically mentioned was that women need to re-enter the workforce and that that's a priority. He also mentioned how this pandemic has fallen strongly on women, Black, and Hispanic people. So those are three demographics he's focusing on. Well, obviously women make up over 50% of the population. So you're looking at 50% of the population. And then without looking at actual like statistics, if you look at how many Black and Hispanic people there are, then so you're saying that this pandemic has unfairly fallen on what, like 75% of the population? So you're basically just saying, well, it's hurt everybody but white men. White men are still doing fine. And then there's a couple little gray areas in there as well. So I thought that was funny. Whenever you break down the population and you're looking at 50% of the population, it kind of throws off your statistics a little bit. So makes perfect sense, obviously. Women are primary caregivers for children overall, based on the systems and everything we have going on. And then also, based on statistics, a lot of Black and Hispanic people were overly affected, whether or not they were women, because they typically work the type of, and this is not my words, this is the words of the Fed and the government, they work the type of jobs that were displaced, as where like, quote unquote, white collar workers tend to be white people or men. So I thought that was all kind of funny. But essentially what they're saying is that because of the type of jobs that were lost, because of childcare issues and schools being closed, that it essentially affected these three groups, more than anywhere else. So he then went on to say that part of the problem is that schools obviously being closed, childcare being an issue, and then obviously very generous benefits. So basically like universal basic income, child care tax credits, unemployment benefits, pandemic unemployment assistance. So, a bunch of basically paying people to stay home. And then quick little tangent on that. If childcare was such an issue and it was so expensive and all these people were only not going to work because they couldn't afford childcare, why wouldn't you then, in a capitalist society, if I knew that everybody was paying ridiculous amount of money for childcare and I couldn't go back to work because childcare was too expensive, I would just say, okay, I'm going to start doing childcare then. If there's so much money to be made in childcare, I'll just start my own business. So I'll watch all your kids and you can all pay me a ridiculous amount of money to not go to work. And then you can go back to work. I can make a ton of money with childcare. Everybody wins. So I find it hard to believe that that's as serious of an issue as it is. I think more likely than not, it's probably just a cop-out. But regardless, that's just my opinion. If I, being a capitalist myself, I immediately think, well, if there's that much need for childcare, why doesn't somebody start watching other people's kids and making money? Because that seems like if it was such a great way to make money, if it was so expensive, why wouldn't you just want to do that? So, but regardless, he basically said that as these very generous benefits start to, wane, as they start to go away, as, childcare starts to open back up or potentially becomes more affordable, and as schools open back up, that this will alleviate the problems and that the tight labor market will now have re-entry of workers into the workforce, and those workers then will fill the jobs and we can bridge that gap, and then everybody lives happily ever after. But then he goes on to say something I thought was very important. He says he would not be surprised to see schools delay openings for 1 or more months. So now he's saying everything's going to be fine soon because childcare will be good again, schools will be reopened, and the benefits will go away. But then he says, but I wouldn't be surprised to see schools delay for a few months. So pushing that back, let's say schools don't open back up, or they stay a few months, or people are afraid to send their kids back. So we'll just push it back a couple more months after that. So we won't worry about that. And then you know what? Maybe if that happens and things get bad again, maybe we'll have to step back in and pay people for a few more months to just stay home. So maybe that happens too. And then you know what? The likelihood of childcare being affordable and people being able to go back, and if there's still fear of people contracting this thing or getting it or bringing it home, then maybe childcare is going to be an issue too. So he basically says this will probably never go away, but it's at least going to be a few more months after the next few months after the next few months after that. So I thought that was pretty good. So once the next threat passes though, once the next strain passes, once it's gone, once everything's good again, then we can go back to regular. So never, we'll never go back to regular again. So I thought that was good. So that's nice. And also they're not talking about the fact that, you know, a lot of people have now gone 3 months, 6 months, 9 months, 12 months, 18 months, coming up on what? It's going to be 2 years at some point in time here by the time. And then you're going to, from 2 years of not going to work, all of a sudden people are just going to go back to work and be great workers again. And the economy is going to be booming. And you're going to be you mean to tell me after 18 months not having a job, you're just going to go back and be a great worker? Yeah, right. We're going to have to, America's never going to be ready to work again. We're going to have to wane people off of not working. They're going to have to start by working like 2 hours a day, and then they'll work up to it. 10 years from now, people will be able to work 40 hours a week again. So I thought that was all just absolutely hilarious. Again, I'm not dogging on people that had childcare issues or got, you know, schools were closed or a parent had to stay home or it wasn't financially profitable to go to work. Like, I get it. I worked in service industry years ago, and I know that for a lot of, you know, people, it was not worth going to work because they would have to pay their sitter. You know, they might go to work and make $100 waiting tables or something and be gone from their family, and then they had to pay their sitter $80. So they basically went to work and was away from their family and had to trust a stranger with their kids for $20 extra. I get it. And then, you know, not including gas and the time away from your family and whatever, it's basically a net negative. I understand. I know that's a real thing. I'm not hating on people. I'm literally just saying that with all the policies and the situations in place, that none of this actually makes any sense. And to say that we have a strong economy and that we're just going to go back to like hunky-dory, everything's good again, it's literally ridiculous. And it's not even possible. There's literally no way that it can happen. There's no way. At some point in time, and now, man, I have to watch what I say on here, obviously, because I'm not a doctor. I'm not telling you what to do or what's safe or what's not safe. But we'll get back into that in a minute here. Because now, you know, Pfizer is coming out and saying that, you know, if you get the little prick or whatever once, 2 times, you know, hey, you're good now. Everything's good. And now it's saying, well, after 6 months to a year, you're going to need it again. So it's not even just like a one and done type thing. And now they're saying that even if you had it, all it does, it just stops you from dying. It decreases your chances of dying. So you go from what was supposed to be 1 in 100, and then it's 1 in 1,000, and then it's maybe 1 in 10,000 people dies of it. But you have to have like pre-existing conditions probably if you're going to die. Well, now we can avoid that. But you don't stop. It doesn't stop you from getting it. It doesn't stop you from spreading it. It doesn't stop you from carrying it or anything like that. It literally just helps you to not die. So if you already had like a 1 in 1,000 or 1 in 10,000 chance of not dying, now you have a 90% better chance of not dying, but you still have to wear a mask. You still have to be careful who you're around. None of it makes any sense. And that's the old strain. Now there's new strains too. So it's even less effective against that. Maybe not effective at all. The new strain is, you know, theoretically, or what they're saying statistically, less likely to kill you, but it's more transmissible. Oh, okay, so you're more likely to give it to people, but they're less likely to die? Well, who cares? Who cares? The whole threat was that people were going to die. So we literally have shut down our economy, destroyed the entire working class, changed everyone's way of life, taken away countless rights, got universal basic income, you know, starting up here. And it turns out that, you know, it's never going to go away, and you probably weren't going to die anyway, and you're even less likely to die now. But hey, everything's good. Trust us. We got you taken care of after we failed at everything. So I thought that was just absolutely hilarious. You know, fuel on the fire as far as I'm concerned for all this and the ridiculousness. So let's talk back about what Powell was saying about transitory. And this I thought was huge. He was forced to answer a question. And the way I look at Powell is, Powell is like a cheating like spouse, okay? He's like cheating on his spouse, but when he's asked about it, he never actually lies because he's a moral man. He's a good man. He's moral, but he is a cheater, but he's not a liar. So he'll cheat, but he still has morals, so he's not going to lie to you about it. So you're like, hey, did you cheat on me? And he's like, I didn't do anything intentionally to hurt you. And you're like, oh, okay. So did you cheat or not? And he's like, well, I did go out and I didn't come home last night, but not to like hurt you or anything like that. I just got caught up. He like never answers any questions. So I thought it was hilarious that he was actually forced to, you know, because people try to tell him, quantify this. What percentage do we have to see of employment? What, you know, do we have to see from the economy? What GDP growth? Like, can you give us any idea? And he always just avoids the question and never quantifies anything. So I thought this was important. He finally answered the transitory question. Someone asked him, what is the definition of transitory? This new made up word that everyone's using that no one even knew about, and you can't even like accurately define it. And now he's actually defined it. So he said, transitory is the increase in price will happen and will not be reversible. The increases in price that we're seeing right now, the inflation that we're seeing, the increases in prices will happen and they will not reverse. They're not going to reverse. They're never going to go away. But the process of the inflation will stop, or at least slow down to 2% or moderately above 2%. So the prices will increase, but not persist year after year after year. So what he's saying now is that the inflation that we're seeing, the price increases that we're seeing, probably realistically are definitely not going to go away. They're never going to go back down, but they're not going to keep going up as fast. And then he goes on to say that inflation's actually a good thing. It's not a problem. We want inflation. We just don't want like crazy inflation year after year after year. But if we get 20% inflation for 1 year, that's not bad. It might run a little hot. It might be a little scary, but it's not going to be 20% every year. We're not going to see hyperinflation. So I thought that was absolutely hilarious. He finally got put on the spot and had to actually say that. Of course, markets were like, you know, looking heavy leading up to it. And then obviously after he said that, you know, it was, oh, thank God, they're not going to taper any of their bond buying. They're not going to taper the mortgage-backed securities. They're not going to raise rates probably ever. So it's, you know, go back to like full-on euphoria in the market. So, but I thought that was hilarious. It was very important. I thought that he actually had to define that because I think once that sets in, it's really going to kick people in the teeth when they realize, uh-oh, so wait, these prices aren't going to go away? Like, I thought when you said inflation was transitory, you meant like it was only going to last for a while and then it was going to go away. Well, no, yeah, the increased rates of inflation is only going to last for a while, but the price is never going to go back down. And then he spoke about wage inflation and how that could be a danger and that we're seeing some wage inflation, but it's not going to persist. It's only temporary because people had to pay a little more or hire different people or whatever. But once the women and, you know, the hardest hit people come back to work these shitty jobs again that, you know, none of the people want to work right now. Once those people come back, everything will be good. So I guess they're talking about illegal immigrants because I'm pretty sure after like 2 years of not working these jobs and just getting free money, people are just going to have more babies so they can get paid for that and like never go back to work. Because I don't know if you've ever done something for like 1 or 2 or 3 or 6 months or 2 years, but after you start doing something or after you don't do something for a while, you don't just go back to doing it the other way after that. No, it never happens. So let's look at our Dow Jones Industrial and we'll go from there. Hang on, I want to see what's up, CW. Good to see you, brother. Any thought about the problem with interest rates being close to lower bound? Of course, is that it really cuts into our ability to react to a downturn. Oh, 100%. Yeah, 100%. They talk about their tools and how many tools they have and how they're not afraid to use them. And well, what tools do you have? If we're already at 1% interest rates and you have to cut rates because inflation's out of, or I'm sorry, yeah, you have to cut rates to combat, you know, an economic downturn. where do you cut them? If you're at 1%, you can't go any lower. So you go from 1% to 0%. Well, we don't have in place what's necessary to go negative right now. So that's where I think, you know, I've talked about this quite a few times, but I think that's where FedCoin comes in, because they can essentially put time limits on this money that they put on a card for you. And here's $1,000, but you have, you know, 1 week to spend it. And if you don't spend it after a week, every week they deduct $100 from your card, you know, just for leaving a balance on it. So then you're basically encouraged to do it. Or maybe bank accounts, you put money in the bank and you get negative rates on it, you know, et cetera, whatever the situation is. But the situation's just, the system's not in place right now. So they're not even ready for it. You know, and they're talking about how they have all these tools and everything. Well, what are your tools? Your tools are to like remove liquidity from the system by putting things on the Fed's balance sheet, which is bad for the market and causes increased volatility. And then you also have like, you know, basically lowering rates, which you're already at the bottom of. So really that just means your only option is to just buy more stuff, because you can't go any lower. Where basically like the Fed fund rate is at, you know, 0 basically. So you can't go lower on that. So what tools do you have left? Well, we're just going to buy more. We'll put everything on the Fed's balance sheet. Well, how's that going to work? You're going to take all the liquidity out of the system, and then once like the river is dry, you know, it's going to cause like crazy volatility in the markets. None of it makes any sense. So, but he did talk about specifically how, one, it was a confidence game. He's like, the market has to believe that when the time comes that the Fed will do something. Well, you lost confidence. No one believes you. No one believes you. I mean, at this point in time, people are still afraid that they're going to be wrong, but no one believes it. I mean, in my opinion. Some talk about the transport sector is slowing down, which will lead to a recession. Yeah, I spoke about that, lazy boy, recently, but I actually will be talking about that again. I have a couple charts we'll look at the end of this section. Jets, Hail, and then I pulled up UPS and FedEx as well. And then I also have the M1 money velocity that I want to talk about as well, and why I'm so confident that we will see a big crash. So let's run through these and then we'll talk about it. So Dow Jones, once again, bearishly engulfed, took out the last 2 days. And we're right back basically at that support level again. It got bought up slightly with Fed talk, but not enough to make a difference. And we still close down here. And we're once again seeing bearish divergence on the daily here. We're getting the hard buy signal at the top of the range, which is almost always a false signal. So you'll see right here, we get the hard buy signal at the top of the range. After we basically get bearish divergence, we have a peak right here. And then we have a higher peak here, lower peak here, hard buy signal, and then we have like this little dump back down to the bottom of the range. So that's what I'm paying attention to. Here we get the hard buy signal, you know, around like the 40 mark or whatever. We come up, basically get a topping looking candle, and then we just roll back over to a new low after that. So then here we get the hard buy signal, go into the bullish control zone, you know, no divergence signal or anything, you know, and then we just dump right back out into that range again. And now here we are at the top of the range, putting in a bearish engulfing candle right here, getting the hard buy signal, putting in bearish divergence between our 2 points right here. So once again, you know, I'm not saying the market's just going to crash tomorrow, but, you know, I think it's more likely than not at least headed back down to like the 34.2 or, you know, maybe 33.6 range. But again, you know, these markets are getting very, very tired. We're all watching a couple stocks play musical chairs right now. Everybody else is already out of the game, sitting on the sidelines. Everybody's putting in these great earnings calls and, you know, these huge hits, and, you know, everything looks so great because they got tons of cash on the balance sheet and they're paying down debts, and now they're allowed to do stock buybacks and all this stuff again, but nothing's going up no matter how good the earnings calls are. A couple stocks have burst to the upside. I shouldn't say nothing, but overall it's not what you would expect to see. But again, it's already priced in. So SPY, you know, same thing. We have a high right here. It got bought back up off this support level. But I mean, look, this green or this blue support level, we have been basically just hanging on to. And, you know, the first time we basically, when we started putting it in here, we have the second touch right here. And then we have the third time when we broke through it. Okay. And then we just kept on going here, find support, do fine here, gets picked back up, break through it again, gets picked back up, break through it again, gets picked back up. And every time we're just not even getting away from it. We're just hanging on to it. And now here we are once again, bearish divergence to the top right here, bearish divergence on both indicator oscillators, just barely hanging on. Overall, candle's not particularly bearish, but we're just hanging on to support right here. And keep in mind also the overall breadth of the market. You know, you have 500 companies inside of the S&P, and probably 10 of them are putting in new all-time highs. And it's putting in new all-time highs. So is it the weight of the top 5 companies, which even they're not doing that great right now, that's holding up price right now? I mean, who knows? We'll have to see, you know what I mean? But I think we're getting, every day that goes by, we're getting closer to the top. The question is it going to be in, a few days, a few months, or a few years? I mean, I don't think it's as close as people think it is, but we're definitely seeing, some more warning signs. Once again, NASDAQ, moving back up here, had a very bearish candle, gapped up here, looked good after the whole Fed thing. You can tell the NASDAQ is never going up when the other 2 main indexes are going up. And the same thing could be said about the Russell. So it's just the same money shifting back and forth, trying to get into the winners, and those will go up while everything else goes down. There's no longer enough money being put into these things to push them all up at the same time. So they're just taking turns. That's like the great rotation, quote unquote. Russell is next. The Russell is by far the weakest. Came up here, got denied at our heart line, and then again at the heart line, and then again we get a bullish engulfing candle off of like the little Fed speak today and everything. Get the buy, get the green histograms. It looks decent, right? If you didn't know otherwise. But again, it's the Russell and NASDAQ are kind of acting together. This one is obviously much weaker. I mean, at this point in time, we've essentially been operating inside this range since February and have not like done anything basically. So XLB materials, we basically broke out of our little channel, our descending channel here, came back down, retested it. Again, it was looking very weak and then got bought back up to a high here. I still expect this to get our measured move up here to 86. This is the XLB. We have XLC communication. Again, very bearish candle, gaps up here. You can tell that the prices are being propped up on these things, or quote unquote, people are buying the dip because they're so bullish. I would not be surprised to see that the Fed was in these markets, quietly buying. I mean, they really are through like BlackRock, but that's beside the point. XLE energy sector, sold back inside that range, bounced what amounts to a neckline right here. And now what we need to see is, do we get that push up to a lower high and potentially put in like a big head and shoulders? Do we come up here and get rejected sooner at this key level at like 50? Do we come up, put in a new all-time high? We'll have to see. Again, the indicator oscillators on the daily are giving us bullish signs, and we also have bullish signs on like the longer time frames as well. XLF financial sector, since we put in our high back here, we've basically just gone sideways. So we have a very clear like resist or support down here at the bottom of the range, and then a very clear resistance right here, and we're basically just chopping sideways. Again, the longer we go sideways on something like this, the worse it's going to look. And this one gives us a little better of an idea of what we're paying attention to. We're basically pinned. This is the weekly now. We're pinned in between the 8 and the 21 weekly moving average. We have red parabolic SARs. We have left the bullish control zone. We now have over 2 months worth of red histograms, and we're below the slope line. So there's definitely some warning signals. Again, the weeklies have been bearish on a lot of this stuff for a while, but we're just hanging on. I mean, but we're literally just hanging on by a thread. XLI, industrial sector, same thing. It's literally the same thing. And that's how when these charts should be trading in line with each other, but not as much. This one is slightly stronger. It's staying above the 8, but all red histograms below the slope line, basically just hanging on. But we are still just in the top of this channel. The longer we stay inside of it and just go sideways, we're going to come down and hit the heart line, and I would expect some kind of move up. But there's not really much meat on the bone on these things at these levels, at least for like a responsible risk reward trade. And I mean, I'm not going to lie, I have not been putting my regular allocation into these markets lately because it's so hard to find something decent. And even if you do find something decent, the likelihood of it being okay, if the rest of the market corrects, extremely unlikely. Extremely unlikely. Everything's going to do what it always does and move together. XLK, and I'm not the only one looking for good deals right now and not finding them. Technology, once again, we got a very bearish candle, got bought back up, and then we just hung back onto it. Didn't get the kind of pop off of it, but again, hard buy signal at the top of the range. Basically bearish divergence between these 2 points on the daily. XLP, Consumer staples basically was operating inside this channel, got the little poke outside of the channel. We wanted to see, does that hold that support? Obviously did not. Got a very bearish candle on the daily, hard sell signal. You know, back down inside the range again. So what's going to happen? Back to the heart line at 70, back to the bottom of the range at 68. You know, we'll have to wait and see. Real estate, you know, probably one of, if not the strongest sector. You know, basically bounced the Stochs right here, came back inside the bullish control zone. Pretty bearish candle, but overall, I mean, probably arguably the best looking of these charts we're looking at. But again, we're underneath the slope line here, basically getting rejected. The slope is still curving to the upside while we're putting in red histograms and, you know, basically putting in new all-time highs, but we're below the slope line. So that's never a good sign. XLU, utilities, you know, basically this is another one of those safety plays. I would expect utilities and bonds to typically be strong around the same time, because as people like lose faith in markets or situations or economies or whatever, they tend to run to things like utilities, you know, or things like bonds, or, you know, whatever the scare is, tells them to like the safety side. So, you know, this one is overall probably one of the best values, just because it's, you know, down from its high back here in 2020 before the big crash, never made a new all-time high. And then on top of that, it's at the bottom of essentially, you know, this multi-decade channel. Well, I guess it's really just a decade. So 2009, we've been operating inside this channel right here, and we're at least towards like the bottom of the range, or at least in the bottom of the channel, without putting in a new all-time high. So, you know, we broke out of our little mini channel right here, came back down, retested it. I expect continuation on this. You know, seeing some bullishness here, but again, it's gonna be hard for any of this stuff to stay strong if we do see some kind of dump here, which at this point in time, a nice 10% market-wide correction, I think would be encouraged. It would at least give people some faith and allow new money to come back into the markets, additional money to come back into the markets. But, you know, if we just keep floating up, there's going to be less and less people. It's basically just FOMO buying at this point in time, in my opinion. XRT, retail, you know, basically operating inside this bullish triangle, you know, hanging out at the bottom of the range, tried to break down from it once. You know, you could draw this triangle a lot of different ways and say that we're still inside of it. That's perfectly fine. It's more for like the shape overall. But this just looks like, to me, a bullish reset. We're basically just going sideways to slightly floating up. The indicator oscillator is down, you know, back at the zero line again. So eventually this is just going to explode to the upside, you know, theoretically. I mean, but what's retail going to look like if, you know, we have another scare, another shutdown, lockdown, whatever? I mean, who knows? Who knows? It'll probably just go up through the roof, I'm sure. XLV, healthcare, of course, is new all-time highs. I mean, of course it is. You know, everybody's going to need another round of jabs. That's another, how many billions of dollars for these companies? You know, how much more money are we going to make? How many more people are going to get sick? How many more, you know, medical procedures are going to be needed? You know, all this stuff just literally is pumping up. I mean, housing and, you know, housing, honestly, real estate and healthcare, I think are going to be the real winners through all this. I really do. You know, not that everything's not a winner right now, but XLY, consumer discretionary, you know, there's a lot of stuff in this. I mean, we had a bunch of big, you know, earnings reports, obviously, but basically just hanging out at new all-time highs. Bearish divergence, once again, looks very similar to some of the other charts we looked at. Oil obviously had that very aggressive sell-off, came back down, retested the breakout, and now here we are back on top of the 821, trying to cross it back to the upside. Looks pretty weak overall. You know, OPEC agreement is back out. You know, everybody's calmed down. Everybody's cool again. I still think oil is a bargain at 72 bucks. But what is oil going to look like, you know, if all of a sudden, you know, transport's having all these issues? I mean, I still think that oil could easily hit $80 to $100 a barrel very soon. I think it's more likely going to be going up unless something big changes. But could something change? 100% could change. So, and, you know, if we look at a longer, man, it's so hard to look at this chart. If we look at the longer time frame on oil, pay attention to, we have just gotten back above the 200 exponential and simple and rolled them to the upside on the weekly chart. So if we keep that in mind, I think if I switch off auto and just look back at it, if we Gen Psaki, we can basically see what the chart looks like. We were in a parabolic uptrend. We went through, you know, basically a big dump right here and then came up, retested and failed. And then this was basically when oil went to like 30 bucks or negative, depending on what you're looking at, futures or whatever. Here we got back above the 200 exponential and simple, and we actually rolled them back to the upside. So is it possible now that we just basically double topped right here and we're coming down to recharge before we come back up and test these higher levels? That's honestly what I think is taking place. It's also possible that we're double topping here and we're just going to sell off. That's definitely a possibility as well. You know, but when I'm talking about oil going to higher prices, I think it's over the next few years, like coming out of all this, all these scares, everything going on. And then if we look at the monthly right here, you know, again, what happened? We got back on top of the 200 exponential here and the 200 simple. We sold off and it got bought straight back up. So what oil does over the next 2 days, if it closes on top of the 200 simple right here, I really think this looks a lot like, you know, what chart does this look like? It looks like the DXY. You know, you came down here, put in basically a W pattern, and we're just having some trouble here at what amounts to the neckline or the top of the V for the breakout. So eventually we consolidate long enough, we sell off a little bit, build up some strength, and then we burst through that V and we can get our measure move back up, which is, you know, potentially over, it's basically, you know, a measure move is going to give us over $100 a barrel oil. And I think that's probably more likely than not. We also have blue slope line. We're back on top of the slope line. We're in the bullish control zone, you know, but what do I know? Kathy Wood says oil is going to $3 to $12 a barrel. So she's probably right because she manages billions of dollars. And I just, you know, play games on the internet with you guys. So I'm sure she's right. I'm sure oil will be $12 really soon. So let's look at jets. So obviously this is, you know, transportation we're paying attention to and what's going on right here. So, you know, this one is obviously, you know, airplane oriented, etc. But it basically looks like it's getting rejected at the 200 exponential and 200 simple, selling off, coming back up for that retest right now. So we're seeing some weakness, all red histograms right here inside the bearish control zone. This is on the weekly. If we switch over to the monthly, what does it look like is taking place right here? Well, we're at a decision point. We basically crossed the 821 back to the upside, and now it looks like that's failing. So again, we have another, you know, again, this is just an ETF for jets, but it's saying that basically like the plane market, the, you know, aerospace, whatever segment has not recovered and is probably not going to recover because it looks like we basically got rejected and it looks like we're barely hanging on here. If we close below the 21 here, we're going to cross this back to the downside and it's going to look like this came up and got rejected and just rolled over. And then we're probably headed down here. Now, are we headed back down to a new low? No, we'll probably find a higher low somewhere as, you know, this market has recovered some, but this was probably an over exuberance recovery and then reality will set in. So overall, this is showing some serious weakness, and it's going to be tough to chop through this area with all this resistance in here. So I think realistically, this is kind of telling us, hang on, you know, maybe things aren't as good as people are making it out to be. And again, we're getting rejected right here on the 200 exponential and simple on the daily. While we're seeing some positivity, some buying coming in, I don't think we should get too excited here. And then if we look at Hale, again, this on the weekly, this one's got a little more towards like, you know, like rental cars and stuff like that. But again, just a ETF situation here to try to get like a broader idea of what's going on inside these markets. You know, on the weekly, once again, we have crossed now the 821 back to the downside. We have all red histograms with this tiny little bounce right here, flip the slope over red, and we're getting ready to come back down here, you know, potentially the bearish control zone. So to me, looks extremely, extremely weak once again. Extremely weak. And, you know, hanging on to the 8 barely, flipped over the parabolic SAR to red, hard sell signal on the monthly, first red monthly histogram since, you know, when was this? This was the big dump, the big scare. You know, you guys know what it was. The big V, the dump you heard around the world. So, you know, again, seeing some weakness here. And then now we'll look at some of the shippers here. You know, UPS, obviously, massive, UPS should be absolutely crushing it right now, right? They should be destroying everything. You know, all-time highs, the whole everything going on here, all this craziness, you know, this everything good for UPS, right? For sure it is, right? Well, according to them, maybe not. You know, they had a great time, everything was good, they went absolutely parabolic, but they're now saying like, okay, well, it's not going to be sustainable. Our next quarter is probably not going to look as good. And while a lot of people are like ordering stuff online still, you know, even though we're kind of reopening up, people have changed, but for some reason we're not going to be able to do as good. Well, yeah, because you're not going to get ridiculous amounts of stimulus from the government to be able to like, you know, have extra cash on your balance sheet or buy back your own stocks or whatever. So, you know, again, all this stuff is unsustainable in my opinion. So when we see, you know, a monthly candle coming in like this on somebody like UPS, that makes me think, wait a minute, they should be crushing it. If there's still tons of money moving around and tons of people buying online and everything's great and the economy's doing great, this thing should at least be chopping sideways, if not going up. It definitely shouldn't be getting big fat bearish red candles like that. It shouldn't be leaving the bullish control zone and getting multiple, you know, red histograms. When we switch over to the weekly, you know what, at this point in time, we've now wiped out back to April 2021, you know. So I mean, this stuff doesn't look good to me. When I see stuff like this, it does not look good to me. We have bearish weekly divergence between these 2 points here, and now we're getting a dump. We're breaking down from a key level, looking like a double top right here. We're getting a hard sell signal, leaving the bullish control zone on the weekly. We have broke down below the 21. I mean, it looks to me like this coming down to like 175 or something like that. You know, and the shorter time frame we go to, you know, and again, we left a big gap here, obviously, you know, and maybe that was all part of the plan, was to just come out and say, oh no, I mean, our company's doing horribly and it's probably like not going to do good in the future. It was just a fluke that we did that good to begin with. Like, that's not what people say that work for companies. Like, I mean, you come out and paint a rosy picture like Jerome Powell style, and you just lie through your teeth without lying. You don't come out and, you know, give bad news at your like earnings call. You know, maybe we just come down here and fill this gap at like 180, close it. Maybe we come back up here and fill this gap at 208, close it. Well, I mean, we'll have to wait and see, but I mean, look at this. It looks terrible. I mean, this is probably done selling off. Look at that knife stick in here. Or maybe it puts in a little bullish divergence and then comes back up. Maybe it hits a 200. I don't know, but this does not look strong to me. You know, and this is, again, back to the transport thing and why I brought it up in the last couple of streams specifically. You know, and we could look at anything. We could look at railroads. We could look at shipping companies. We could look at whatever you want, and it's going to tell us the same thing. FedEx also. Same thing. Same thing. Gap down here. Why? So what is this telling us? Oh, well, people must be using the postal service then, right? So that's why FedEx and UPS are not doing good. No, it's giving us a broad scope of the market and what's going on here. You know, look at this massive bearish divergence here, bearish divergence here, and now we're getting ready to lose the 821 right here. Switch over to the monthly. Excuse me. Sorry, I could have muted that. You know, we're still inside the bullish control zone, still have a blue slope line, but we're seeing the first weakness. We saw one little bit of weakness right here, you know, basically at the beginning of the year, and now here we have 2 more months of weakness here. And we're seeing our first red histograms. We're getting bearish divergence on the weekly, left and right. And then if we look at this right here, well, what is this right here? This was our previous high, okay? This was our previous high in 2014. This was our previous high in 2017. And now look, we didn't even get close to that high in 2020. Now let's look at these points. This was our point back here in 2014. That was our high. This was our point here in 2018. That was our high. And now this is our 2020 high, okay? So this is going back to 2014 bearish monthly divergence. Well, on some of the indicators, obviously the TJD, TDMACD, you know, put in a new high. But based on the Stokes, this is bearish monthly divergence. It looks like we're putting in a giant megaphone on this too. Here's our low right here. Here's a lower low right here. Here's our high, high, higher high. You know, I mean, without getting too crazy with it, you know, what's it look like we're doing? You know, it basically looks like a massive distribution pattern taking place here. And again, you know, maybe not. Maybe we'll just all of a sudden go to new all-time highs again. And, you know, they were just, I don't know, whatever. this this is not what you want to see, you know, over 7-year period from back in 2014 at, in a booming economy when everything's at new all-time highs and everything's just going great. In my opinion, maybe it is. Maybe that is what you like to see. And maybe if you're a bear. Okay, so let's switch this back to the daily, and then let's look at something else that I showed this off in the group lately, and it was kind of funny too, because when I posted this in the group, I put a couple arrows and a circle on the chart because it's so hard to see what the hell is actually going on. And then, people were still like, wait, what is going on here? And that's my point. And I don't fault anybody for not noticing this. It's absolutely ridiculous what's taking place here. This is the M1 velocity of money. Okay, so this is like people saving, like checking accounts, like the money that they have in the bank. So the velocity of money, which is, essentially how many times that money gets spent back into the economy, like by an X, by a percent, and obviously most people are familiar with this, but just for a heads up, if you basically go to your job as a, let's say, car salesman, and somebody buys a car and you get $100, and then you take that $100 and you go fill up your gas tank with that. And then the guy at the gas station takes the money that he made off that and then goes out and gets dinner and tips the waitress. And then the waitress takes that money that she got and she goes out and pays a babysitter, and et cetera, et cetera. That's how many times that same dollar gets spent back into the economy. The alternative is, when like big money gets that dollar or whatever, or somebody doesn't spend that money, they put it into a savings account because they're afraid they're not going to be able to get more money in the future. They take that $1 that they made and they just go put it in the bank, and then they don't spend it back into the economy, and then that's a wrap. So that's the difference between like a 5 money velocity and a 1 money velocity. Well, the M1 money velocity, and I believe this is actually, it says monthly, but I believe this is calculated in quarters. So this goes back to, so it's like 3 months per little blip on this chart. This goes back to 1960 and shows us that, it was 3.65 at its low back in 1960. It topped out here in 1981 at about 7.6, and then bottomed out here in 93 at about 6.23, and then it topped out here in like 2007, 2008 before the, obviously huge crash back then. That was at 10.73. Every dollar is getting respent 10 times plus into the economy. And then this is right before the big CVD incident. We were at 5, but we were already on a downward trajectory massively since 2008. So one could argue that the problems from 2008 were never fixed, because we have a high here, then we have a low, then we have a higher high, then we have a lower low. So that's not good. And that was going on since 2008. So this isn't something that just happened overnight. Well, look what happened from, this little incident here. Let's get out our little drawing tool. And again, I'll highlight it. This is where we were at when everything started going wrong. And again, keep in mind, we noticed this from July 2019. It starts to go down here. And then the actual big gap down here is January 2020. Well, what is that? Oh, somebody knew something was going on here before, the whole world did, obviously. And then this is now. Let's look down here at what's taking place currently. Well, that doesn't look healthy. That's not good. Now we're at 1.2. So what does that mean? What does that actually mean? It means that before this happened, every dollar going into the economy, every dollar getting spent in was getting spent 5 times over. Okay? So that means $100 was the equivalent of $500 worth of circulating in the economy. So if it goes down to 1.2, that means every $100 is the equivalent of $120. So how do you make up this $380 difference? How do we make up, well, more than that? How do we make up this $400 difference between, the 1.2 times and the 5.2 times? We have to have 400 times more money to bridge that gap in velocity. So if you don't fix the velocity of money, the confidence, the amount of times that people spend it into a healthy economy on goods and services, you have a gap that you need to fill. So with nothing else in mind, no other factors, just kind of looking at only this right now, if before, there was $100 circulating in the economy naturally, and it was getting spent 5 times over, 5.25 times over, you know, it was the equivalence of over $500 in the economy. So in order to get that same amount now, that same $100 has to be multiplied by 5 somewhere. So we have to pump 5 times as much money into the economy to get the same effect as when the velocity was at 5. So that means that whatever we're doing right now to try to fill the gap and try to simulate this fake market that's healthy and everything's okay and we're going to go back to normal, we're going to have to do it exponentially more to try to ever get back to these levels over here. And we're not just going to all of a sudden have a gap up the way we had a gap down here. People aren't just going to all of a sudden, this is confidence. This is what this is. This is confidence. This is like Great Depression level confidence. I mean, I don't know how old anybody is specifically that's listening to this, but I remember hearing stories from my father, from my grandparents, basically saying that after the Great Depression, people saved everything. I mean, my dad is still one of those people who like saves an empty yogurt container as like Tupperware to like put things away in the fridge. Like, you know, you had record numbers of people that would hoard anything, save like every twist tie they ever got, or every rubber band they ever got, or every container they ever had, every jar from every bit of sauce they ever got. Like that was that mentality of save, you save, you save. And like my dad never got into the stock market, never invested in anything, never believed it, never trusted it, never would go into any of that stuff because he was basically traumatized through like his parents and his life coming out of that Great Depression because the confidence was never there. So I think that that's, you know, I know that that's basically what this represents. This represents that confidence level. So we're not just going to all of a sudden have this huge level of confidence that comes back into the market, into the economy, like especially not if we just have these reoccurring events that every few months, oh, there's a new strain, oh, there's a new scare, and now it's global warming, the sun's going to explode, the oceans are going to melt, there's going to be tsunamis, volcanoes are erupting, there's a new strain, like there's hunger shortages, there's cicada plagues, like it's never going, we're never going to have confidence. You know, oh, taxes are going to go up. Oh, universal basic income. Oh, this, oh, that. No, all these things are negatives. So, I mean, you can look at it however you want. But when I see something like this, and I wish this chart went back further. I wish we could look back at it further and see what's going on. But, you know, I mean, we've been in the bearish control zone since 2009. And we've been in danger levels since way, way long time ago. You know, since 2008. So something broke in 2008 and never got fixed. And then in 2020, you know, it basically like shit the bed. So that's what I'm seeing here. I think this is a very important chart. If you look at something like M2 money supply, it's not as bad. But then you also look at M2 money supply and you look at what else is included in it. And then you say, oh, okay, because there's shenanigans going on here. They can give people money, but they can't make people spend money. But they can mess with securities, like they can mess with, you know, some of the other stuff in like M2 and M3 and make the numbers look better. But they can't really mess with M1 because this is more about the psychology of the consumer and the overall mentality and like how they're thinking and what mindset they have. And that's why this is so much more important, because it's like untainted data, in my opinion. And again, this is the velocity, not the actual supply. So, you know, there's definitely an important distinction there. I'm going to jump over into the comments and I will respond to you guys. And then we will do run through our like tech and friends here real shortly after that. So what's going on, guys? Good to see you all in here. So we got CW. Good to see you, my man. Lazy Boy, also good to see you as well. Hopefully we answered your question there, Lazy Boy. Cool, thanks. Yep, I'm guessing that's a yes. Yeah, for sure, CW. Peter, good to see you as well, my man. Always. They do love them ETFs. Yeah, of course. Peeps are not spending. Yeah, that's exactly what it is too. That, you know, and for them to say all these things are great and they're all crazy and everybody's got record earnings and this, that, and the other. Well, to some degree, but there's definitely some big warning signs in some of this stuff. Maybe this is why they want digital coins. 100% that's why they want digital coins. They can just airdrop money into people's wallet to spend and drive the money supply. That's exactly what it is, Peter. You totally nailed it, dude. That's why they want a Fed coin, because a digital Fed coin, okay, part of the problem right now is the banking system. The banking system is the intermediary between the Federal Reserve and the end consumer, okay? So the Federal Reserve did everything they can to make the banks lend. So they basically like take all the pressure off the banks. They take away the regulations, the reserve supply, all this stuff. They make it just so juicy and so easy for banks to lend. But the problem is they also fix rates at extremely low levels, which technically, like the real estate mortgage loan rate is not fixed the same way the federal funds rate is fixed, but they're like proportionate to each other in the sense that, you know, you're seeing like 2 and 3 and 4% mortgages because the rates are so low, you know, from the federal funds rate. So banks have little to no incentive to lend people money. So they say, so we're going to make very little money on these loans we give people. They're going to have extremely long time frames, you know, 20, 30, you know, 50-year mortgages they're trying to do now. So we're going to loan people money at extremely low rates for long amounts of time while the housing market is pumped up to the highest levels it's ever been and clearly in a bubble. And the consumer has basically like lost their jobs. There's like uncertainty in the markets. Like we're not sure what the economy is going to look like in the near future or even for 3 years or 5 years or whatever. The banks are basically just saying, no, that's too risky. We have to worry about people paying us back. We're businesses. We have to make intelligent loans expecting to get it back. So at this percentage, at these low rates, with this level of risk and uncertainty, we're good. We're not going to loan out this money. So the Fed's like, well, we did all this stuff to get you to loan money to take away the worries. And they're like, yeah, no, we're good. We're good. So now the Fed is getting pissed. The Treasury Secretary is getting pissed. But the banks is like, look, we're businesses. We're not going to shoot ourselves in the foot. We're not going to wreck our bank. We're not going to ruin the, you know, what we've had going on for 100 years or 30 years or whatever because you want us to loan money. So essentially a Fed coin would let them, like you said, airdrop money directly into people's wallets and bypass the banking system. So it's like, oh, you don't want to loan people money because you're afraid they won't pay you back? We'll loan people money and then we'll just back it with the federal government so that it's guaranteed the same way student loans are. So you can never get out of it. Or the same way, you know, whatever. So you can never get out of it. So then that way we don't have to worry about you paying us back because we don't even care because we're the Fed or we're the government, however they decide to do it. But regardless, you know, we're not a business, you know, technically, so we don't have to worry about this. We can just put it as a liability somewhere on, you know, our balance sheet and not worry about it. As where a bank would have to basically, you know, sell that into like a foreclosure or a default loan or whatever. So they basically cut the bank out of the picture. So now let's say, and that's why I will not invest in banks, because depending on what happens in the future, banks might go away completely. Maybe they work it out and the Fed just says, look, when somebody defaults on it, we'll just pay you back 90% of what they owe you. So you have to just write off 10% and da-da-da. I don't know. I don't know what's going to happen with it. But when I look at the big picture and I look at the fundamentals and the technicals and what could potentially happen, it looks to me like the government and the Federal Reserve are going to team up real soon, and they're going to jump over the bank's heads and say, F you then. We bailed you out in 2008. We bailed you out in 2020. We're done bailing you out. Screw you. We're not going to help you anymore. We're just going to go over your heads. So that's where like a Fed coin or a digital currency or a cryptographic, you know, basically like government stable coin comes in. And that's also where negative rates come from, because now they can say you have 1 week to spend this money, and then every week after that, 10% of it just goes away. So we'll send you $1,000 a week. That's your universal basic income. And every week we go in there and, you know, those tokens that were issued 1 week ago, we take 10% away until there's nothing left, or whatever it is, the fine, if there's any money left on your card. So then they can force the velocity of money. Because right now, what the problem was, they gave all these people money, all this stimulus checks and everything. They sent it out to everybody and said, okay, everybody go spend your money. And then nobody spent it. They just put it in their bank accounts. And that's why they said the American consumer is strong. They have more money in their bank account than ever before. The American consumer saving rate has gone from 1.5% to like 35%. That's good. That means people are healthy. That means they're saving money. That's good. No, that's bad. Because the reason they sent out all that money was so people would go spend it and prop up the economy, because that's the only way to prop it up. but instead they just hang on to it. So a lot of the digital currency and the digital ideas and the negative, interest rates and everything, and the Fed coin jump in the banks and all that stuff, it crushes everything. But at the same time, what is it if the government and the Federal Reserve owns everything? Because if they give you a loan for your house and then you default on it, instead of a bank owning your house and then, foreclosing on it and then, selling it back off and try to recoup their money back into the economy or whatever, who owns it? The government or the Federal Reserve. So in the end, what happens? They, more times people default, the more stuff they end up owning. Well, that doesn't sound good. And then does that give them a motive then to make the economy crash or let the economy crash? Because then they get to own everything? Well, no, that's evil. Only like rich, horrible, evil people would ever do something like that. Whoa, wait a minute, dude. Is that who's in charge? I mean, I'm just saying, I don't know, maybe it is, maybe it isn't, but what's that old saying? Absolute power corrupts absolutely. So, call it a conspiracy theory, look at the whole big picture or whatever, and the more power you give somebody, the more likely they are to use that power in a negative way, in my opinion, and, based on much smarter people than me who wrote down like, intelligent quotes like that. I don't know who said that specifically, or can't think of it, but I'm just saying there's a big picture here of what's going on. I'm not saying that this was all done intentionally to crash the economy, but I'm just looking out, extrapolating what could happen into the future and saying what might not be a good idea if the government or the Federal Reserve owns everything. There's names for that type of stuff, when the government owns all the businesses or all the houses or all everything, is this the United States? Is this a democracy? Is this a, free market, or are we just looking at fascism? I don't know. You have to tell me your opinion. I don't know though, but starting to blur the lines here a little bit, in my opinion. Yeah, exactly. Crypto type lending. That's exactly what it is. They could just lend you as much money as they want. They have no worry about if you default on it or whatever. They just, it's guaranteed. They basically just put a lien on your house and come pick it up or come take your business or whatever it is. And then, all that shit we talk about China, and then it's like, well, are we really United States anymore? Or are we just, communist, socialist, democracy, whatever? I don't know. But anyway, that's enough politics and whatever. Let's look at some more charts here, and maybe we'll get a tangent before the end of the stream. Hang on, let me clear my throat real quick. All right, so looking at Tesla here, you guys know how I feel about Tesla. We're in what amounts to, in my opinion, a giant descending triangle. We have a clear top back here. We have a clear bottom again. We have a lower high, and then we have another series of lower highs. We're getting closer and closer to the 200 moving averages, barely hanging on to the 200 simple. Looks like we're getting ready to come down and test the 200 exponential. So I think high 500s, low 600s are very, very soon coming our way. At which point in time, who knows, $500 right after that, retest the support. I don't know. We'll see. But this is not healthy price action for something that's just going to all of a sudden make a new all-time high. We have basically, this is what we were talking about. We're very close to losing the weekly moving average. We tried to save it multiple times, and now we're looking to close below it. After a blowout quarter of Tesla earnings? I don't think so, bro. Let's look at, on the weekly scale, the last time something like this happened. Well, let's see. So I guess we'll go back to like 2014. We went absolutely parabolic, saved the cross, new high, finally lost it here, and then we put in a same high or lower high, and then we just went sideways. Well, how long from the high in 2014 till we took that high out again on Tesla price action? 2017. And during that time, from the high to the low, sold off 51%. And from the cross down, the initial cross down to the low, sold off 42%. So are you ready for Tesla to just go sideways for the next 3 years before it puts in a new all-time high? Are you ready for Tesla from the cross to put in another 40% to the downside? I mean, we're talking about $300 range. So, you know, I'm not trying to scare anybody. I'm not trying to hate on Tesla or whatever. I definitely think it's there, but keep in mind that you can be early and still wrong about something. So Tesla can go to $5,000 or $100,000 or whatever, and it can be this world-changing company that absolutely crushes it. But if you're early, you're still wrong. And this is exactly what happened on the monthly. We cross, you know, save that price action right here, cross to the upside, go absolutely parabolic, and then basically just go sideways from, you know, what amounts to the 2014 to, you know, basically like 2019, 2020. It just literally went sideways. So does this look a lot like that initial burst we got back here in 2013? And then we get the hard sell and we just go sideways to down for, you know, the next few years? Sure looks similar to me. I mean, we're hanging on right now, but I would not be surprised to see, you know, another 40% to the downside, you know, somewhere in like the $500 range initially, and then potentially as low as like $300. I would honestly not be surprised in one bit to see Tesla at $300 in before long, in the next year, 2 years, whatever, or just chop sideways. I know everybody super loves Tesla, but that valuation is absolutely ridiculous. I know it's not just a car company. I get it. I made a bunch of money off Tesla. I love Tesla. I think Elon Musk is a genius. It's great. I mean, he cracks me up too. He's hilarious. I thought he was funny on Joe Rogan. But let's be real here. There's a difference between what's going on here and a technical on a chart. So Airbnb, I mean, it's doing exactly what we said. Came back down here, retested those lows here. What's going to happen? I mean, we'll see. We'll see. This, to me, extremely bearish chart. You guys know how I feel about charts that look like this. You know, we have, this is everybody that ever was involved in this stock that has lost money right now. This is all the negative price action that's taking place right here. And then here's the people that are up. Just to keep in mind the amount of overhead resistance, the amount of pressure that would stop this from going higher. I mean, so would you rather be bearish on this or bullish on this? Like, I mean, these people did okay. These people did okay. I mean, they're not negative, but what is all this? I mean, again, you know, I look for value in things. I'm definitely a value investor, but right now, I just do not love how this chart looks. I don't even like how this chart looks. Now, is there potential for this to have bottomed out and break out, and this is just like an amazing opportunity to be a buyer? There is 100% potential for that. You know, we have a low right here. We have a bunch of green histograms. We have found support on the slope line, which is blue. We're getting the hard buy signal coming out of the bearish control zone off of a retest of that low. But do we really want to take a chance right now and then have this end up looking like China stocks while, you know, the 821 crossed on the weekly way back here? I mean, I'd rather just wait. You know, we have a low right here on the weekly. We have a low right here on the weekly. And then we put in a lower low right here on the weekly. So, I mean, for me, it's a wait. But there's a reason I look at it every day. There's a reason I look at this chart all the time. There's a reason I'm showing you guys this chart and paying attention. Because this is a potential value play. But in time. In time. But when the time comes, we're all going to crush it. Because, I mean, just from, if we look at where it's at right now, from its high, and you could say, oh, that was a euphoric high, whatever. It's 54%. It's a nice little move back up. And I like Airbnb like future, but right now the chart's just not quite showing me enough. Pinterest, you know, we're basically operating inside of the same channel still. We have a very clear heart line here in yellow, resistance in red, support in blue. As far as I'm concerned right now, you know, you guys know, obviously we did 32% on this from our entry back here off the 200 exponential and simple. We're back on top of it. We're finding support. We're back at the top of the range. I would rather just wait, see a little more strength. I don't want to see this just roll back over. We did find support on the heart line, but we're putting in another lower high. We have a high, we have a lower high, we have a third lower high. We're potentially putting in a fourth lower high right here. I really need to see this find support here and then at least take out this high. But at that point in time, might as well just let it take out this high. And then at that point in time, let's just let it go to 88 bucks. I mean, it's 12 bucks from where we're at right now. And then, you know, we can get in on the blue sky breakout. I'd be much more comfortable there than it just putting in another lower high and selling back off. Will I buy it again when it goes back down? If it goes back down, for sure I will. As a trade though, because honestly, this chart doesn't look great to me. It basically went absolutely parabolic and now it's just hanging on, basically just chopping sideways at the top of the range. Is that distribution taking place? Maybe. Maybe. I mean, you know, we saved the 821 cross right here, broke down below it, got a bullish engulfing candle or almost. Here we're just kind of hanging on to it. I really want to see this price action develop. If we can consolidate on top of this range for a little while longer and basically start showing some more bullishness, I will get back into this. But again, I'd rather buy it on confirmation than, you know, just speculate at the top of the range. Because you guys know how I trade. I like to buy support off the blue line here or off the moving averages. I like to sell resistance off the red line here. So we are at resistance. So to me, the likelihood of a breakout trade, there's no room for error here to the upside, as where to the downside, there's plenty of room for error. So I would rather be out of this trade or, you know, short on this and then be wrong on a breakout than it just stay inside the range it's been operating inside of since February of 2021 and sit back and say, damn, that was obviously trading inside a range. Why did I assume this was going to be the time it breaks out? You know, this bullish candle looks decent, or this candle looks decently bullish. But again, we're leaving the bullish control zone, multiple red histograms in a row. We've had, since our top here, we've had 3 red histograms and 1 green one. So I don't like those odds. 3-1 says it's going down. We'll wait and see. Again, I like this stuff or I wouldn't be looking at it, but I just don't like it right now. Okay, so Wish, you know, it's basically like the bargain Amazon. It's like the big lots of Amazons. Again, it has a functioning product. You know, I like it, you know, whatever. It's got some serious potential here. It's also literally since its inception at 20 bucks here has sold off and it's at half the price since then. You know, got a dead cat bounce, traded fairly technically along the way. Do I think it bottomed out right now? Is there potential for a move back up to the 382? There is. It's a 27% off the bottom here. That's the one we talked about. 6%, you know, stop loss. It's a nice trade setup, obviously. But again, if I look at, I think we did this one. I think we went through this one pretty heavy in a previous video. Let's turn off the moving averages and look at this. I just want to, you know, and again, this is just like a theory crafting type thing, but okay, let's look back at what's going on here with this price action. Obviously this red, let's make this a little clearer right here. We talked about a couple times, and again, I don't want people to get caught up on this stuff and the likelihood of things being true that haven't been validated yet. But we've talked about using Fibonacci's, not extensions, but basically fib levels and support, resistance, etc., to determine whether or not a move is completed based on algorithms and market makers. And that's what this is right here and what I'm paying attention to. So from the top right here to an imaginary low that we have not hit yet, this is our 618 right here. So we had a very clear resistance support at the 786, then the 618, then nothing really right here, but we had a resistance here about the 886. Then obviously our top is drawn in. We had support at the 886. We break down pretty heavy. It's hard to tell what's going on here, but we're kind of operating around that 618 level again. Then we see a perfect bottom at the 382. We see resistance area support at the 0.5. We come down here, sort of chop around at that imaginary 236. Again, come back up to the 0.5. See some very clear interaction here. See some very clear interaction here at our 382. Seeing some very clear interaction at our 236. So what does that tell me? Well, that's with a theoretical target down here of, and again, it's not completely theoretical. I'm not just making this up, but it has a target of $6. And that's what I'm paying attention to. So now let's tone this red one down a little bit and see how did I come up with that specific target other than just these like you know, absolutely beautiful like bounces and everything. Well, if we look at from our initial top here in green, the 0 and the 1 back here at our initial bottom, so we take basically our fib level and just draw it. You know, imagine that this was not here and we just drew it right there, and then we're taking it to the top. So we're going from this low right here to this high right here, and then we're looking at our Fibonacci extension targets, and you'll see the initial sell-off was exactly to the 1.618 fib extension right here. So that was our 1.618. We broke down from that and just floated around in the middle of nowhere, and then we see resistance at the 1.618, which corresponds perfectly with our red 382. And then we come back to the 1.236 in green, 1.236 in green, and now here we are back down here below the 1.618. So to me, that says that we probably didn't bottom out yet. And then when we do bottom out, it's probably going to be another fib target, which is our green 2.618. So that's how I kind of came up with that. Again, we can't confirm it's going down there. Maybe this is just a higher low and we just go to the moon right now. I don't think so. This still is very bearish to me. So that's what I'm looking at. Do we get down to $6 on Wish? No, probably not. We'll never go to $6 on Wish. But if we do, I'll tell you I told you so. And we're all going to make a lot of money. So, but this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research. Trade responsibly. And know that I just like colors and drawing and hearing my own voice. So that's why we're here today. Not to learn anything. Not to learn what to trade or how to make money. We're just here to listen to my voice and draw pretty colors and shapes on the screen. So, Bumble, waiting on this one. We obviously had a very nice trade on this, 42% off the bottom, using basically our measure move target of the descending triangle. We're beating our head here on that key resistance. Came back down. Could have took the trade right here. I did not take it. I'm not interested. When I make a nice percentage gain off something, I like to just leave it alone for a little bit, let the chart develop, and then come back to it when the time is right. So that's what I'm waiting on right now, waiting for this to develop a little bit more. Starting to show some strength for sure, but I'm just not convinced. I'm not convinced we're not just going to put in another lower high right here. So if we beat our head on this 0.5 again, and then we start seeing a little movement, I will probably take a trade back in this. But right now, it just looks like we're topping out at resistance. It looks like we're probably going to come back down. I want to see it eventually come down and put in a higher low. Maybe it already did, but you know, I don't like to trade on maybes. I like to trade on high probabilities. Buzz, buzz, motherfuckers. Baidu. Okay, so we saw a key breakdown from some of these China stocks. They obviously look very bearish. There was a bunch of bad news. Now we're seeing that bounce back up. Is that it? Was that a fake out? Kathy Wood sell the bottom again? I don't think so. I really don't think so this time. This is a very bearish chart to me. We broke down from a key level. I think this is a reaction rally, and we're coming back up to test the breakdown point. What we need to pay attention to is, does this act as resistance now? Because that's actually the 0.5 of this massive move from the bottom to the top right here. So this was our low in 2020 March. This was our high in February 2021. And then, whoops. Don't get grabby, kid. We basically are just putting in a massively bearish descending triangle. Matter of fact, I really should go through and just delete all this stuff, and we could do, maybe next time we'll look at less assets, but we'll just start from scratch on some of these charts, and we'll just draw them again together, because there's just, these charts are so old and there's so much junk on them. I mean, it's nice to look back and be like, we were right, but at the same time, it's better to just go from scratch and learn together and go back through it, you know. So to me, this looks like a breakdown. We're coming back up to retest the 0.5, and then we're going to head to the 618. I don't think it's possible that this is just a little bit of, you know, basically like a spring where we break a key resistance and then we shoot back up. I don't think so. If it starts looking that way, trust me, I will let you guys know. A lot of indecision right now, a lot of stuff going on with China. I like diversifying across the globe, but now just does not seem like the ideal time to do it. So Baba, same thing. This thing like capitulated from that level, broke down from a very key descending triangle, and now it looks like it's coming back up to retest support right here. I still think eventually this goes massively higher, but at this point in time, you know, it's looking unlikely that. Now look, things could change here on the monthly. Let's switch off actually the moving averages and look at this monthly chart, because you guys know I'm massively bullish on this, and there is still a slight possibility that what we originally talked about is correct. It's still possible that from our low back in 2015 to our top right here in 2018, that was our 1. This is our 2. Inside of that 2 to the 3 was basically our recent top in 2020. This was a 5-wave structure right here inside of the 5. So 5 inside the 5. That's all right on track with Elliott wave. You know, and Fibonacci extensions, we've looked at the Fibonacci retracements, the extensions, the likelihood of, you know, targets into the future. But one of the rules is on a long time frame, the 4 cannot come inside of the zone of the 1. So where the 1 tops out, technically right here or technically here, depending on what time frame you're looking at and whether you're going by closes or candles, on a monthly time frame, we do not want to see, well, we can't. It will invalidate the 5-wave structure if the 4 closes lower than the 1. So if the 4 closes in the next couple of days below $207, this 4 is closing inside of the 1, and it's invalidating the Fibonacci extension rules because the 4 cannot retrace into the zone of the 1 on a long enough time frame. If this gets bought back up and it just turns into a wick, which you can see there's actually a nice wick left behind already, it's just covered up by my measure move down. If this gets bought back up and it closes right here at that key level we have in place, that's perfectly fine, and then I will be bullish again, and that's great. But on the monthly chart, we have a hard sell from the top of the range. We have all red histograms. We have flipped the slope line over blue, red from blue, and we have broke down from this parabolic trend line going back down to 2015, this green parabolic support. So there's a lot of things right here telling me that this is probably not going to act as support, and it's probably not going to, you know, just start going back up here, and it's probably not going to be a 5-wave structure that takes us up to $419. But again, still possible, but it looks very unlikely to me at this point in time. But we'll know in 2 days. So 2 days from now, maybe I'm singing a different tune. But I think this is a reflex rally, honestly, on all these China stocks. I think they just got oversold. I think people thought it was a good deal to buy into them, and we'll see what happens. Diddy, you know, maybe we come back up here and close this gap at $10. Again, I think it's the same thing. You know, we're selling off. There's not enough. This is on a 4-hour because there's no history to look at. We're getting the hard buy signal. We did close above the 8. If we get above the 21, maybe this thing just starts running to the upside, but they're still in big trouble with China right now. And if there's one thing I know about China, it's if they're not happy with you and they can do anything about it, it's probably not going to be good for you. So to me, reaction rally. BZ Kanzun Limited. Again, just coming back up here, retesting key levels. You know, nice moves up here on these things for sure. Anybody that scalped them to the upside, it's great. But there's nothing telling me that this was a good idea. I mean, you could say we bounced the 1.618 fib extension here in yellow. You know, and that's why you did it. But it wasn't even technical. It didn't even bounce the 1.618. If it came down perfectly to the 1.618, I might be bullish on it. But we took out the previous all-time low and then just got, as far as I'm concerned, a reaction rally. I can't get behind these things, especially with this little trading history, until we see some actual, like, legitimate bullish consolidation. NEO had a massive sell-off here. This thing had been holding strong in comparison to most of the other stocks we look at, Chinese. Had a nice little gap back up. But again, we really just got to watch here. You guys know I've had a long-term target in place at like $25 or potentially as low as that 618 at like $8. Sounds crazy, but when you remember this thing, you know, this thing was in a massive downtrend from basically inception at $14 in 2018 till the CBD dump. Actually, October 2019, it was at $1.17, like bankrupt, and then went parabolic. So is it possible that after this run up here, it comes down and retests around the top of the 1 right here, somewhere around like $6 or maybe $12 or something like that, or as low as, you know, 25? I think there's a high likelihood. As far as I'm concerned, still just a lower high rather, and we're more than likely going to head back down. Overall, much stronger than the other Chinese stocks we looked at, but on the daily, we're losing the 821 again. It's crossing to the downside, and then if we switch over to the weekly here, you know, we'll see basically this essentially looks like the Tesla chart. We lost the 821 to the downside. We tried to save it. We closed below it again, got rejected, and it looks like it's getting ready to have continuation. Where's that continuation take us? You guys know, like 30 bucks, 26 bucks, whatever. Maybe this just goes to $100 tomorrow and I'm wrong. All in. But I mean, I'm just using technical analysis. So what can I do but look at what the charts are telling me, guys? I mean, I could sit here and tell you, if you want to just tell me all your favorite stocks in the comment section, and once a week, I'll just put charts up on the screen, and I'll tell you how great they are and how much money you're going to make off of them, and I'll give you ridiculous price targets that make no sense. I can do that for you guys. I'll definitely have more subscribers, and probably like more people will love me, but it's not going to really help you at all. So I prefer to help you learn and learn why I'm doing things and how I'm doing things and how I succeed in these markets, with hope that you too will succeed in these markets. But again, maybe I'll just make a second channel and I'll just, like, we can all get together and I can just tell you how awesome your investments are and how you're going to be a millionaire because you went all in on XRP. You know, whatever you guys want. You can put a list and I'll just tell you how great they are. So Taiwan Semiconductor, and that's a joke. I know you guys aren't here for that, but it just cracks me up, all these other channels. They're like Bitcoin's market cap will be somewhere between 10 and $200 trillion soon. Fuck out of here, man. You got any snake oil left, or did you sell it already? Taiwan Semiconductors, you know, again, this one is extremely unstable to me in a market that's been absolutely crushing it, and there's been huge demand for it. This is one of the big players, one of the key players, and it's still down, you know, basically like over 30% from its high. And there's one reason, in my opinion, this is down. It's fear. What's going to happen to Taiwan? And, you know, I think it's justified fear. You know, worst case scenario, we call it Chaiwan instead, or it just becomes, you know, China Island, or whatever they decide to rename it. Or maybe it stays the same. Maybe it's just Hong Kong 2. I don't know. But I have a feeling that this is probably not the play if you want to be safe. So, you know, the chart looks terrible technically, and then fundamentally, God help these people. I don't know what's going to happen over there, but if China and Taiwan go to war, it's not going to be good for Taiwan Semiconductor. I know that much. And I think that that's why the chart looks like this. It's a giant descending triangle, and I think eventually it's going to break. So, but honestly, God help these people. If can only imagine. Intel, you know, Intel, this is another one that, you know, I'm watching long term because this is a big play eventually. Especially, I think the more bad that happens to Taiwan, the better it is for Intel, if that makes sense, as a company, like company-wise. But we'll have to see. I mean, this thing has been basically, in my opinion, if we go to a longer time frame and we look at how long this thing has been chopping sideways for, and you could argue it's because they, you know, pay too much of a dividend and they're not reinvesting into factories, and now all of a sudden they're going to start reinvesting in factories and things are going to change. Well, I believe they change when they change. This was our 2000 high back here, okay? And then we put in a low in 2009. So massive bearish trend for 9 years, and now it's slowly been grinding back up to the previous all-time high, but still has not made it to the new all-time high. So that's basically this gigantic range with key fib targets inside of it. And then if we zoom way in here, and let's go to our weekly for this one. And if we zoom way in here, and we can actually, you know what, there is something else I wanted to mention, why I won't invest in it currently. You know, this was our high right here, obviously. This was our, you know what I'm doing. I don't even have to tell you. You guys know why we're here right now. You know what these arrows mean, okay? This is a top right here. This is a higher high. This is a higher high on a monthly chart. This is a high right here on our indicator oscillators. This is a lower high right here on our indicator oscillators. This is a third lower high right here on our indicator oscillators. That is triple bearish divergence on a monthly time frame on an asset that has not made a new all-time high since 2000. So maybe it gets invalidated, maybe, but more likely than not, I think it has a massive sell-off after not putting in a new all-time high since 2009. You know, it basically went up for the last 12 years and now it's showing triple bearish divergence at a, you know, key resistance level. It got rejected off the 886 right here. So what's going to happen to Intel? Probably going to capitulate. And I mean, I don't know if you guys watched like the earnings call or, you know, some of the interviews lately, but I mean, damn, bro, try to sell your product a little bit. Don't sell us on the bad news. Like, at least do something. You know, we're getting rejected here. You can see this is our top of our channel that we're operating inside. God, I don't even know where our channel is. Okay, this is the top of our channel in yellow right here. This is the bottom of our channel right here in yellow. This is the heart line right here, the orange. And you can see, depending on what time frame you're looking at, you know, some key interactions along the heart line, and obviously double top here and a bunch of bottoms here. We broke below the heart line and got rejected. It looks to me like we're coming back down to retest the bottom of the range. And honestly, eventually, it looks like we're probably going to break out of that range. The bearish divergence plays out, and then we get one of these targets, you know, 36 or 30 or 25, at which point in time, you know, I will be scooping this up like crazy because, you know, depending on what happens and where the government makes it rain next and how much of this goes into Intel, and if they start, you know, this whole semiconductors in the USA and the factories and blah, 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 infrastructure, this could be a huge beneficiary and could take some serious market share and have some serious potential. But before that happens, I think it goes way lower. But anyway, that's just, you know, that's just based on technicals, guys. Okay, NVIDIA. I mean, this is like, you know, the best of the best. You the best, NVIDIA. You know, it's up here at all-time highs. Had to pull down, trying to save that 821 cross on the daily. Looks great. This is after the split. It was at 800 bucks. Went down to 195. I think it's good, or, you know, 200 bucks a share or whatever. Four-way split. I think it's good. People are more likely to buy it at 200 bucks. I think your retail investor out there is more likely to just throw $200 at something than jump into something for 800 or whatever. So overall, I mean, look, NVIDIA is crushing it. It's crushing it. Is it topping out right here? I don't know. I mean, it looks decent on most time frames. There's definitely some little sketch looking action going on here, but overall, I think it looks great. If this gets a sell buy sell at the top of the range and starts showing some red on the monthly, you know, I might be a little worried for this, but, you know, again, I'm not looking to like trade this one actively at these valuations, you know, but this is obviously a long-term hold. But again, you know, I didn't buy it at 800 either, so, or the equivalence of 200. Zoom, been inside this descending channel since we topped out back here in October of 2020. You know, broke out, came down, failed to hold support. There's still potential for the breakout right here. We're still at the potential entry point. This is a nice trade. You know, if we see some strength out of it, 8% stop loss with 35% to the upside, you could argue it's a good enough, you know, risk reward ratio right now, 4.5 to 1, that it's worth taking a stab at it. It is still consolidating outside this range. Yeah, I mean, it looks good at this area right here, but it's also below the 200 exponential moving average, and the exponential moving average has rolled over. This looks like we broke above it, got rejected, bounced the 200 exponential. Simple is the dark one. Bounced the 200 exponential, and then are getting rejected off the 200 simple. So could it easily just break down from here and come back down to 292 or something like that? It easily could, because it just as easily break out to the upside, you know, put in a lower high or a new all-time high. It easily could, but I'm not seeing enough in one direction or the other. But if I was just going to take a shot in the dark, I would like to take it from this area. You know, I'll always rather sell right at resistance or buy right at support if I'm just going to flip a coin. And if you're going to flip a coin on something, you know, if the probability is 50-50, might as well do it at 4.5 to 1 odds. If you're right, you make, you know, 4.5 times what you lose if you're wrong. But again, that's just me. There's definitely some bullishness here. Zoom, I definitely like long term, but I think we could easily see this thing, you know, take a big dump right out of bed. But I mean, you guys know me. You know, I like to take the easy trades, the easy money. You know, there's a million things, and if you find a chart that looks good but not great, I just go till I see the one that looks great. I'd rather just take the one that looks great. You know, but if you have unlimited capital and you just want to take shots in the dark all day, by all means, you know, there's definitely a trade setup to be had. Peloton, we'll see on this one. I mean, you know, this thing already outperformed what I thought it was going to perform off the bottom right here. I'm not going to lie. I thought it was going to get rejected at $100. So it's already up 20% from there. Does it go up to the 786 and hit 145? Chart looks decent. It's back above the 200 simple moving average. People love their Pelotons. Maybe this subscription service is exactly what they needed. I don't know. I do not know. Lemonade, you know, basically just looks like you're putting in a giant triangle. You know, broke down from the triangle, but if we switch to a longer time frame, you know, I think on the weekly, this thing is painting a very clear picture. You know, we have a low right here, a higher low, a higher low. You know, I think eventually we come down here, retest the bottom or retest the top, and then when we get the breakout, whatever direction it's in, that's where we want to be. But we're seeing weakness on the Stochs here. We're seeing weakness on the TJD, TDMACD, and, you know, overall, we basically just got rejected here. I think we're going to get, we got the 821 cross back to the downside on the weekly. I think we get rejected again around this level. And I think we come down, at least retest the bottom at $80. I think more likely than not, this breaks to the downside. But we'll see. You know, there's key support back here, you know, but there's also key resistance. So we'll see what happens from these levels. I like the idea of what they're doing because they're trying to get away from the traditional, like, greedy, we're not going to pay you insurance by, like, basically redistributing, like, their profits to charity. I like the idea of that. But, I mean, technically, the chart doesn't look great. ARKK, I mean, we talked about this a little bit in the group. We talked about it on the channel and everything. You know, basically, these ARK funds at this point in time are, if you were in this for the last almost, I mean, we're going into August here. So you're 7 months in ARKK, Innovation ETF, and you have made zero money. You're flat. And that's assuming that you didn't sell underwater or, you know, potentially took profits on that little run up. But will Cathie Wood do well again sometime in the next 10 years? Yes. Will she do well again in the next year? Probably not. I think the big problem with this is that there's constantly money flowing in and she's actively trading these funds, which it's great. Actively managed ETF. That's awesome. What a great idea. But is Cathie Wood a trader? No, that's not what she's good at. And she's proved it because ARK is doing horribly. She's a good investor and she's good at looking at the big picture and seeing things out multiple years out. And she even says, I'm looking at 5 years out. I'm investing for 5 years out. Well, that's fine. But the people that are underwater that sell negative or put their money somewhere expecting it to go up and make huge gains, and then it just goes sideways for 7 months or a year or 3 years before they make gains, those people are going to get fucked. So don't be like Sam. But in all reality, do I think she's right in the long term? Do I like these, you know, these innovation funds and these ARK managed ETFs? Sure. But do I like them now? No, they all look terrible. A bunch of people came in and basically bought the bags of all the people that made money on these funds on the way up. And look, I'm going to tell you the truth. I've made money off these funds too. But I'm telling you the truth. I don't foresee it in the near future. This thing crossed to the upside back here. It chopped sideways forever, sold off massively, and then crossed to the upside. You know, nobody ever talks about this. That in 2018, this fund went sideways from 2018 to 2019 for a year, and it had sell-offs, you know, as big as 26%, and then in the CVD dump, 30%. So is it possible that we already had that blow-off top right here, and we're just chopping sideways, we're getting the cross back to the upside, and then we're going to go to new all-time highs? It is 100% possible. Is it likely? I don't know. I just don't see it right now. I mean, based on what's inside all these funds and everything, it looks more like to me we're just trying to hang on to these 200 exponential and simple moving averages, and it's going to sell back off. This is still a very bearish chart when we look at this right here. We have a high, we have a low, we have a lower high, we're probably going to have a lower low. You could argue that this took out the previous highs right here, and that this was our high, our low, our lower high, our lower low, and now we put in a new higher high. Sure, I want to see this come down and base out for sure. Other than just this little touch on the moving average, I want to see this base out somewhere at a new higher low, and then I can get bullish on this potentially. Right now, no, definitely not while we're underneath the slope line, and it's still powerfully blue to the upside. So we'll see. Most of the other charts look worse for the ARK funds, but they're pretty much, it's pretty much like two charts between them. But the ARKF, oh wait, did I say the wrong one? Innovation? Oh, okay, FinTech, my bad. I was about to be like, wait, did I just? Yeah, okay, so FinTech, this one's FinTech. Again, I like this over a lot of other stuff. I like a lot of these companies that are in here, but I'm not convinced that Cathie Wood is the best trader. And she's trading an ETF for you, charging you money, and it's not making any money. This goes back to December of 2020 or January 2021, and again, flat for the last 7 months. So why are all the regular, why are all the indexes up between 7 and 20%, and Cathie Wood trading for you is flat minus her fees after 7 months? I'm just saying, she's obviously she's not doing great lately. Did she do well before that? Yes. Will she do well again in the future? Yes, I'm confident to say that. But right now, for the last 7 months, sorry guys, no. Etsy is next. Again, I like Etsy. We got a breakout of this channel, came up, back down, found support, came up here, put in another high. I really like this when it gets above 226, and I think it's going to new all-time highs. There's definitely a trade to be had here. This area right here, I think, if we hold at 189, it looks real nice. This was a nice little wick back up. Got to see what happens here. Potentially bearish divergence developing, but a little too early to tell. But when we zoom out and look at the big picture on this one, it is holding pretty well. Again, it looks like it's crossing the 821 back to the upside and holding. The weekly is obviously a couple days from ending. Is this the bottom right here? And we're just going back to new all-time highs? Maybe. We'll see here very soon. There's a couple of these next few charts that I'm seriously looking at to get back in on. And this is definitely one of them, obviously. But again, we'll see with these. I like the idea of like these Etsy's and these Wishes and some of these other, non-Amazon selling platforms. I like Amazon too. But we just gotta wait for the right opportunity here, in my opinion. And we're getting very close to some of them. Square is next. Square, we got a high, we got a lower high. We have a potential third lower high right here. We got to see what happens with this one. Same thing, looks good. Looks better than the majority of the market. I like Square overall. Is this thing going to take a hit if crypto takes a hit? What's going to happen? I don't know. We'll have to see. I like Square overall though. eBay, after hours, this thing took a massive hit. Massive hit. And it was their earnings. And I knew this was coming, which is part of why, or no, I'm sorry, PayPal I was thinking of. I got psyched out by eBay. eBay and PayPal are clearly tied together though. I like eBay still. I still think eBay is coming up here, going to potentially put in some new highs. It is putting in new highs, but finish off this measure move at 78 bucks. It still looks good. And the inverse of what I'm about to say about PayPal is true for eBay. eBay left PayPal and stopped using PayPal for payments and then started their own, managed payments. So now they're eliminating PayPal. They're taking the PayPal cut. They're charging tax on all these online transactions, and then they're taxing the sellers. They're taking a percentage of the payment processing from the sellers of the tax. Before, what was happening was eBay was charging tax and keeping it and paying it to the government, but not charging any fees on the payment processing of that tax. And then PayPal was doing the payment processing and then not taking a percentage on the tax. They were taking it on the amount that comes from your eBay account to the PayPal account. So what eBay did was they cut out the middleman and said, F you PayPal. And then they increased the revenue overall, because before they were processing all these tax payments for free. Now they're taking a cut of the tax payments and they're getting PayPal's whole cut of the actual payments. So not only did they steal all that, not steal, but eliminate PayPal and put all that money on the payment processing in their own hands, but by charging that payment processing on the tax as well, they actually increased the revenue. So they're getting all the money that PayPal was getting plus more because now they're getting paid. So they got rid of a net negative, which was them processing that tax payment for free. Then they took all the money that PayPal was getting and got that as well. And now their balance sheet looks even better. Their profits look even better. And, you know, they said F you to PayPal. So overall, eBay looks, I mean, fan-fucking-tastic. Like, hats off to the man running the show over there. I don't know why it took him so long, but good job. Now, PayPal is the opposite. They were up here at new all-time highs. We took profits on this trade, and then it actually went up slightly higher since then, which, again, that was a nice trade. It was with the wick. I did not catch the wick here. I sold it, I think, up like 15%, which is still nice. Maybe it breaks out and goes to new all-time highs. But after hours, I want to say this thing sold off to like, I think it went down to like 280, I believe, or around 280. And that was their earnings call. And it was a miss because they lost all that eBay revenue. So I don't know what happens. I think we probably bounce back up and try to close the gap. I don't know where it opens tomorrow. We'll have to see. Maybe there won't even be a gap. Maybe it'll just reopen back up here at 300. But I think we hit the target back here at 273. We'll see if that holds. If not, the 0.5 at 262. We'll have to wait and see. All that is from the high to the low back here, or, you know, essentially the inverse from the high to the low. So you can obviously inverse these fibs. So the 618 retracement, bearish wise, from the top to bottom, is just the 382 retracement from bottom to top. And then the 0.5 is the 0.5, the 618 is the 382. You guys know all that. But, you know, in my opinion, we were already looking at the bearish divergence taking place and then expecting basically a technical or fundamental miss based on the lack of eBay revenue. So when I look at all that and then see it making a new all-time high, getting a hard buy signal after we got the divergence signal and exited the bullish control zone and retested the previous all-time high with bearish divergence, 3 drives taking place, tells me this move is going to be sustained. It's not just going to be a gap down and then bought right back up and then new all-time highs. I think that long term, again, I like PayPal, I like Square, I like these things instead of the banks, but I don't like them right now, and I think this thing has continuation to the downside. So we'll see where it bases out at, though. Again, Apple, man, I mean, this is one of the ones propping up the whole entire market. You know, again, great trade. I obviously still have an Apple position, broke out to new all-time highs, broke back down, retesting the previous all-time highs right here. You know, the target to the upside was slightly higher for a 17% gain. Also, the measure move here, you know, of our basically pennant or flag breakout rather. We'll have to see though. Do we get there? We're holding on to this slope line right here. You know, this is a big time indecision candle in my opinion. And Apple they blowout earnings, but this is a big time indecision candle and a potential double top right here. So we'll see, does this level hold? Does the previous all-time high and this little neckline hold? Or is this a double top and we come back down and test like the 134 range? We'll have to see. And is Apple a huge portion of what's holding up all these indexes right now? It really is. So if we see weakness out of Apple, it's going to translate into the markets. And look at the chart on Amazon. Same thing. You know, double top potential right here. Retesting the previous all-time high here as well. You know, does this area hold right here? Or do we break down and test like one of these other levels? We'll have to wait and see. But look, if Amazon and Apple and Facebook and Netflix all start shitting the bed here, which some have already are on the way, how is this market going to continue to all-time highs? Facebook consolidating all-time highs, still looks fine. You know, on the chart, I still think it's a piece of dumpy dump. Google, you know, massive bearish sell-off, you know, gaps up here and then just tries to retest highs, gets rejected, and then sells off again. You know, we're coming straight back down to 2667 in my opinion. Again, you know, we got to be careful with this. We're seeing nice little volume spikes here at the top of the range. Nothing crazy to be alarmed about yet, but, you know, this was our previous volume spike. Nice little sell-off after that. We saw another previous volume spike here. Nothing crazy right there. And then again, another volume spike right here. Basically just went sideways. So, you know, it's a notable amount of volume at least. You know, the same one we saw basically every other time when we just went sideways or topped out. So nothing to be alarmed about quite yet, but I think we probably will fill that gap. Nothing looking crazy on the weekly. Obviously at very elevated levels, but you know, I mean, come on. What do we expect? This thing's just been floating on up. Netflix, I mean, been going sideways forever. We're right back at July 2020 prices, over a year sideways in this channel. When it breaks out, it's going to go to the moon or underground. I don't know which one it's going to do. I mean, did they already overperform? Did they already get every user possible? I mean, I doubt every user possible, but I mean, how are they going to get more subscriptions? I think they have to change the game plan a little bit. I've heard that there's some plans to do so, but for the last year, they've just gone sideways. You know, they did technically put in a new all-time high, but as far as I'm concerned, it's range bound until it's not. So if the other key market movers start to sell off and then the indexes start to sell off, I think Netflix is going to break down from here. And we're going to see it retesting. You know, obviously this is a key support right here. After that, I think it comes back down to like 388. I mean, that I know that's a massive sell-off. Maybe 400, nice round number, and some like clear support back here. I would 100% not be surprised to see Netflix back here at like $400 in the very near future. You know, in the next few months or whatever. So again, we'll have to see what happens, but I think like around $400 is a very reasonable target. Again, it could easily break to the upside, and I'm wrong. We'll see. But it's had a year to do it, so whatever it does, it's going to do it violently when it does it. And we just want to make sure we're on the right side. Vodafone, this is, you know, I'm always trying to look at like European stocks and see what's going on here. This was one that was requested recently. I could go either way on this one on shorter time frames. It actually does look good. It looks like we're basically doing something like this. It really does. But my question is this legit or is it a reflex rally? We have a low here. We have a higher low here. We have a higher low here. Oh, and this is a English or British, whatever, communications company. I looked into it a little bit. They have like, I think they're involved in like, what? It's like Europe, South Africa, like bunch of other places. Overall, seemed legit, technically, fundamentally. But when I look at the chart, it's kind of saying a different thing. You know, we were basically getting rejected by the 200 exponential and simple, broke down from them. You know, we're getting what amounts to a death cross right here after we just got a little golden cross, after not putting in a new all-time high in a predominant downtrend. Looks okay in the short term, but when I zoom out on this thing and I look at like the monthly chart, I do not like how this looks at all. At all. You know, we have a previous all-time high here, then we have a low, then we have a lower high, we have a higher low, and then we put in that same high again, and then we take out that low. So to me, this looks like a high, a low, a lower high, and then a lower low. So do we get a move back up here? Yeah, we probably do, but the 200 exponential and simple are rolling over to the downside. I mean, there's definitely some bullishness on the chart here, like potential on the monthly, but I don't like how this looks right now. I don't like how it looks right now. You know, we're breaking down on the weekly, losing the slope line. If this support holds right here, could it easily get a move back up to 20 bucks? Yeah, I mean, that's like another 20, 25% move back to the upside. I don't think now's the time on something like this. I mean, when markets all over the world are putting in new all-time highs, and then you got a chart like this that hasn't put in a new all-time high since 2000, I mean, even Intel looks better than this. It had a previous all-time high in 2000, came down, and then it's at least floating back up to those ranges. This thing is literally just making lower highs. I'm sorry, lower lows since February 2020. So, again, I'll keep an eye on it. We can keep looking at it, but for me, it's a no-go for now. Again, there might be a little 20% scalp in here, but I just do not like how this looks. So, I'm going to jump back over in chat right here, take a drink, and then we've got crypto and commodities left, and then a couple just random stragglers on them. So I will see what you guys got to say here. Crypto type lending. CW says, so where are you hiding your monies? Pillows or freezers? Yeah, right. So, more like the safe, man. I mean, I still have a lot of my actual investment portfolio. I still have my quote unquote hodl position in crypto. And then obviously I have a ton of physical gold and silver. But, you know, look, I shit on gold and silver a lot. And I am a massive believer in gold and silver long term. I love gold and silver long term. I love the idea of crypto and blockchain technology long term. I love a lot of these stocks long term. But I mean, I'm telling you guys how it is. You know, I buy things when they're cheap and sell them when they're expensive, or invest in them, you know, semi to permanent. And right now, trading wise, you know, with the exception of some scalps on, you guys know, Bitcoin, Ethereum, and some of the other shit coins we'll look at tonight, I've been finding difficulty, and you know, making short-term trades or investments for like long-term positions, because the way I look at it is, if I'm investing in something for 1 to 5 or 10 years, I want to make sure I get it at a good price. Even if there's some drawdown on it, I don't want to just immediately go underwater 25 or 50% for the next 1 to 3 years. I might as well just wait. And that's how I look at a lot of stuff now. There's a lot of stuff that's starting to look juicy, or could look juicy, or has potential, but I'm not going to buy it at shitty prices and take a drawdown. I'm better off just letting that money sit in cash and get devalued at 6 or 10 or 15%, whatever it amounts to, arguably 25%, but that's bullshit. And then put it somewhere at a better time. So, but it is what it is. You know, that's how I look at it. To me, I would rather stay liquid longer and potentially miss out on great deals on something than buy it at an inopportune time and immediately suffer drawdown or suffer elongated drawdown. I'm still not convinced that the stock market doesn't go up to my targets. You know, I think the Dow could still very likely hit $50,000. I really do. I really think the S&P, you know, goes up to, I mean, what, 16, what did I say? 1600, I think was my target on the S&P, or 4600. I really do think it could, but there's also a probability of a 30 to 50% sell-off, or at least a 10% sell-off before then. So we really just got to see, man. Really got to see. But yeah, in the meantime, pillows and freezers, man. I hate to have it in the bank, I'll tell you that much. New Pathway says, dollar bills, yo. CW, no reason to own Netflix unless they do a Cuties too. Oh my God, dude. That's so fucked up. I didn't watch that, but I heard like some of the online reviews for that and everything. That's so ridiculous. That just tells you we're living in like full on Sodom and Gomorrah times, and like we're getting ready to get hit by an asteroid, or like volcanoes are getting ready to like explode all over, and earthquakes and the Great Flood. You better build that Noah's Ark, son. Okay, let's rip through these commodities and then we'll do some crypto. What time are we at right now? How we doing on time? I think we're making pretty good time, I think. I feel like we are. 2:08. Okay, so we're not doing great, but we're looking at a 3-hour stream. Let's be real here. But that's okay. XAU gold. So gold is really trying to hang on to the 200 exponential and simple moving average. I mean, they're squeezing into nothingness right here. But when I zoom out and look at, you know, bearish on the daily chart, the weekly chart has lost the 821, reclaimed the 821, and now it's basically losing it again. You know, slope line is red, hard rejection off of the slope line, more selling than buying, hard sell signal. This looks bearish to me. It looks bearish to me. But I'm not gonna lie, I did almost buy some more gold the other day. But I just have to wait, because it could easily lose another $100 to $300 in value quick, I think. Silver looks terrible now. It was hanging on to this forever. It's now below the 200 exponential and simple, closing below it for the first time this entire trend. The whole time it was hanging on to the 200 exponential. Now here it is closing multiple days below 200 exponential. And then if we look at the weekly, you know, this is the same picture but clearer version. From when we got the cross at like 16 bucks, The 821 never crossed to the downside, even though gold did multiple times. And now here we have the weekly cross. Since then, we sold off heavy. I really think we're coming down here to put in a new low. I really think we're coming down to like $23, $24. Hard sell signal, all red histograms, red slope line, 821 cross to the downside. Sorry, silver gorillas, or I don't even know. Silverbacks. Sorry, silverbacks. You know, the silver premiums are coming down all of a sudden. You think that's because the middleman all of a sudden is just a generous person? You think it's because all of a sudden more supply came online? Or you think it's because they're getting worried that they're about to get screwed because they bought a bunch of silver while it was expensive and charged high premiums so they didn't sell it all, and now they're about to be underwater? That's what I think. And then we look at the canary in the coal mine. Gold silver chart was telling us exactly what was taking place this whole entire time. We broke out of this descending wedge right here. We're expecting to get the measure move. It is not moving to the upside. We have already made it back to the 236. Next target is the 382. We got our measure move here, the 0.5. You know, and then this is our key area we're paying attention to. This is the weekly. I don't even look at the daily on this. Let's switch off our drawing tools and take a look at our moving averages. We'll see the 821 cross back here at 100 silvers to 1 gold. And then we capitulated down here, made it as low as 60 silvers to 1 gold. And now here we have crossed 821 back to the upside. So we need to pay attention. Overall, I think this goes down in the long term, but we could very easily see, you know, this is a weekly chart. So this trend could last for, you know, 2 months, 6 months, a year. You know, we have flipped the slope line back over, all green histograms, you know, seeing strength come out of the stochastics. This tells me we're probably coming back up to like that 80 to 90 range, and then we'll eventually get rejected and then sell back off to lower prices. You guys know how I feel about this, what I think is going to happen. I think silver is going to go on an absolutely parabolic run, but I think before that happens, it's going to get crushed again. The last time this happened, gold-silver ratio put in a parabolic high, came down, put in an A, B, C correction, and it was 30 silvers to 1 gold. And then we went parabolic up here to 130 silvers to 1 gold, and then an A, B, C correction back down to like 40 silvers to 1 gold. Look, I'm not saying sell your silver. I'm not saying buy gold, but if you're going to buy silver or gold, this chart is telling us it's better to buy gold right now than silver. And then once we go back into a downtrend, it's telling us it's better to buy silver than gold. So, and then once again, when we get back down here to a ridiculously low valuation, which 60 is basically like the average valuation. Like if we look back, this chart goes back only to 2007. But if we look at like the mid range where we've operated inside this whole time, I mean, what's the range of silver to gold? You know, this is obviously a high, you know, this is obviously a low. Where's the meat of this pattern take place? I mean, right around here between what, 50 and 80, you could argue, you know, maybe a little closer down here to like this range, something like that, maybe like 50 to 70. So what's the middle of the range? Right here in the center, the 50%, like around 60. So at 60, it's pretty much a wash. Damn it, deleted the wrong line. At 60, it's pretty much a wash in my opinion. You know, at 50, it's a deal. At 80, it's a little overvalued. That's how I look at it, you know. But again, you know, I love silver and gold. I think they're great. I think one day silver goes on a parabolic run and, you know, everybody rejoices. But not on this day. Today is not that day. XPT, fatty platty, below the 200 exponential and simple, very weak. This thing has been weak for years and it's just showing weakness. Is it just retesting support and now it's going to go parabolic? Yeah, probably. I mean, the 200 exponential and simple have been, you know, in a confirmed downtrend since like 2013, and it's just gotten crushed since then. And now it's finally gone back to the upside, but it went parabolic, got back above support. Now I want to see it come back here and hammer out support. But honestly, I'm a buyer between $800 and $1,000. If I had to buy a precious metal today, which one would it be? Probably either platinum or gold, honestly. Definitely not palladium. Let me put that back on the daily. First Majestic, you know, these miners getting crushed. Just put in a new cycle low since like this whole little deal right here. I think it continues down. We saw a little reaction rally on these things, but I mean, what's going on right now on the daily? You know, we find support back here at the 50-55, then it's the 90 or 89, and then it's the 200s, and then it's the 377, and then it's the 528. So what happens after that? Well, there's no more support. So you got to go to a longer time frame and see. So you can see how obviously incrementally now when we go to the weekly, we're just hanging on to the 89 right now, getting that dead cat bounce. The 821 has crossed to the downside. I think First Majestic easily goes back down to $10, $11. Again, sorry guys, I know some of you are going to unsubscribe because you love First Majestic and I'm fudding your silvers, but let's be real. Technicals. Spirit fingers, because you can't see me. Silver Juniors, same thing. You know, it's showing weakness now. It basically had this chart, tried to get out of the top of it, failed, breaking out of the bottom now. You know, trying to bounce back to the upside. But, you know, when we look at the daily, we're hanging on to support, barely hanging on by a thread. And now the weekly, you know, we have crossed 821 to the downside. We're headed down here lower, 1250, maybe as low as 1120. Again, I don't mean to fudge your silvers, but USAS just getting absolutely crushed. Not unexpected. I mean, I liked how this looked a while ago. There was potential for it, but, you know, once it broke that $2 level, there was, you know, that trade was off. There's just nothing here right now. You can't just try to pick a bottom on this thing. Maybe we're at the bottom right now, but I'm really just, I got to see something out of this. You know, there's a definite possibility that this turns into a gigantic inverted head and shoulders, sort of like what some of the cannabis stocks are like putting in right now, like ACB. But, I mean, do you really want to try to pick the bottom on this thing when it could go down another like 30 to 50% or maybe lower? I don't. I honestly don't know why this thing is getting absolutely crushed, but it is. So, it is what it is. And when the time is right, we will buy it, but not now. Tilray. Tilray saw nice earnings, nice bounce back here. You know, I think it was like a 20-something% move today, 25% move today. Beautiful. You know, I still have some of this in my long-term portfolio, but I mean, you guys know how I felt about the pot stocks. They were looking bad there for a bit. Is this the bottom? Maybe. I think more likely than not, it's not. You know, we were hanging on to the 200 simple here. We broke down from it. We got a nice earnings call. We retested the 200 simple and 200 exponential. We'll see. If it reclaims this area, by all means, I can get bullish on it again. Maybe we get a move back up to like $27. But to me, this looks like a breakdown from a key level, a retest, and then we could potentially see continuation. And if we see continuation, Tilray could get real nasty. I mean, we hit some of our targets, though. I think I said $12 was the target. This is what we were paying attention to, this previous support right here. So we front ran it by like a couple cents. But again, the 821 have crossed to the downside. We failed to save it, and now we're just retesting it as resistance. More likely than not, it's going to act as resistance and sell off. But we'll wait and see. I mean, maybe this was our 1, 2, this is the 3, this is our 4 coming down right here. And, you know, I mean, realistically, if this is our 1, like we had charted out a while back, there's still potential here for this. We don't have to get bearish on this just yet. It could easily come back on a longer time frame to like $10.35. Maybe it bases out here and goes parabolic. I'm still massively bullish on Tilray long term for, you know, the Fibonacci extension move on this thing is like a freaking $1,000. The previous all-time high is $300. But right now, I'm not going to dollar cost average down to it if it's going to go to $10 and it's at 16 now. No, thank you. I'll just wait. I'll just keep putting my money in my mattress or my freezer. Wait for the right time. But I mean, if you're going to invest in actual pot or you're going to buy pot stocks, I mean, I'm not going to financially advise you or anything, but probably a pot stock is a better investment because at least it doesn't go to zero. And by go to zero, I mean you smoke it and then it's gone forever. So ACB, you know, potential for this head and shoulders. It was a nice scalp right here. We did over 30% on that trade, but you guys know how I feel about these pot stocks. I'm not just going to ride them back down. If you didn't take profits, you made, I mean, we bought down here. We rode it up. I mean, I think we took profits at like 30-something%. If you didn't take profits, you're right back down at where you bought again. And another thing that tells me this move's not going to be sustained is, with Tilray, is the whole rest of the market still looks like shit. Tilray had a great earnings call. People bought into it. It had a nice bounce. But look, the 821 is still crossed to the downside on these things. They're still getting rejected on the weekly. I mean, it doesn't look good. And I don't think Tilray is just going to all of a sudden start just going absolutely parabolic, crushing the world, and every other pot stock and ETF is just going to look like shit. I think they just had a great earnings call and were oversold, and they're getting a reaction rally. Canopy growth looks absolutely horrible. Broke down below the weekly 200 exponential. The only thing left here now is the 377. I mean, is Canopy going to 16 bucks? Another 20% down? Probably. What I'm looking for in this is, I'm looking for, I mean, even the last time it got the buy, sell, buy, it just died after that. So even if it does get the buy, sell, buy, I can't even get like ridiculously bullish on this thing. And I mean, these things are just the underperformers of the fucking last like 3 years. Everything else is just crushing, and they just haven't done anything. And the ETFs are the same way too. They all look weak. The whole space looks weak. Tilray, in my opinion, just had a nice little reaction rally. You know, in my opinion, this is the type of thing that you sell into. 25% rally. If I'm upside down in a position, or back ahead in a position, or flat now in a position, I'm just getting out and waiting to see. I'll easily, gladly buy back in at a higher price if I'm wrong, than just ride it down another, 25, 50, whatever percent. URA, these uranium stocks, same thing. A lot of these commodities were oversold after parabolic runs. Uranium's opposite. It's been doing great, but it's really not opposite because it's massively down. Long term, it's just up short term. So URA had a nice move up here, showed a bunch of weakness, reaction rally back up here, looking good on the daily. Definitely some potential here, but excuse me. When I look at the weekly on this thing, we broke down below the 821. We're trying to save it right now. Maybe we consolidate here for a little bit and move back up and save the cross, but it looks more likely to me this is just a reaction rally. All red histograms below the slope line. I don't like how these uranium stocks look. I haven't liked it for a while. I told you guys a while ago. No secret here. We go to the weekly on UEC. Same thing. It already crossed 821 to the downside. Looks like a reaction rally. Looks like a dead cat bounce. Negative slope line in the bearish control zone. All red histograms. No thank you. CCJ, same thing. Reaction rally off the 200 exponential. You can see some of these are weaker than others. This one's slightly stronger. URA is a little stronger than this. And then UEC is the least strong. CCJ, though, same thing. It looks like it's trying to avert the 821 cross, and it doesn't look like it's going to do it. Copper had a nice run back up here. Came back down, closed the gap. Started finding some support. But, I mean, CPER, what happens next? Again, it's trying to avert the 821 cross. Looks good overall. I like copper in the long run. I think there's definitely potential for it. Do I think you should buy physical copper? No. That's the stupidest thing you could ever do. Pay some massive premium for like little bars of copper that take up a ton of room. And then, oh man. I'm only saying that because I recently heard someone saying that they're stacking copper too. I think people don't realize that when you see the price for copper, that it's in pounds. So they think they're getting a good deal when they buy like an ounce of copper for like $3 or $2 for like an ounce of copper, like a nice fancy bar. And they don't realize they're getting destroyed because there's 16 ounces in a pound and the price of copper is in pounds. But I don't know. I mean, I know people don't realize that, or they wouldn't be talking about hodling physical copper. Lithium, LIT, getting that retest back up here. Again, still very bullish. Bouncing that key support off of the previous all-time, or not all-time high, but yeah, all-time high, right? No. Yes, no? I can't, no. Previous high. Cycle high. I'm massively bullish on lithium, copper, nickel, a bunch of these like battery plays long term. I like this ETF. I'm still in this in my long term portfolio. But just got to be careful with some of this stuff. I think a lot of these like plays are way ahead of themselves. This is a new one, new ETF from the same group. This is the hydrogen ETF. I wish we had caught this sooner, but you know, there's no price history on this, but just looking at this right now, it's probably going to come back up here and top out again in the same area. But long term, I like this play. We just have to wait and see where it bottoms out at. HYDR, hydrogen ETF. And again, we can look at a shorter time frame. Oh, never mind. No, we can't. What is happening? How is this happening? There's no trading taking place on this? Am I missing something? What the hell? Okay. There's something wrong with the 4-hour chart. So. LBS1, lumber. I mean, this looks terrible. You know, massive sell-off. We knew it was coming. Trying to carve out a bottom here. Doesn't look good so far. We got to wait. We really got to wait. You know, if this cross back over here starts to base out, whatever. But I'm going to tell you right now, you go to the hardware store, look at what the prices are for a 2x4 now, and look at what they were for, you know, not too long ago. And, you know, they're back to normal prices. We could easily just base back out here or whatever. Everything's just back to normal, in my opinion. There is a ton of lumber stockpiled everywhere. The supply chain is filled. And honestly, I think what happened in lumber is what's going to happen with every other supply chain. There was a supply chain constraint. There was restrictions. There was bottlenecks. Prices went through the roof. And then once the bottlenecks were gone and it was filled back up and the demand went back to normal, everybody had double and triple and quadruple ordered. Now there's just supply just sitting everywhere, just stacks and stacks and stacks. And I think that's what's going to happen with a lot of businesses. They were ordering and ordering and ordering. Now they're trying to cancel orders. They got too much coming. They were double ordering and triple ordering because they were selling everything and they couldn't get enough product and they were losing out on business. And then all of a sudden the bottleneck's gone and they're just sitting on a ton of supply and way too much supply. And now they're not going to need to place orders. Therefore, demand is going to go down because even though there's still real demand, there's no longer false demand from the middleman or the retailers for a lot of these goods. Therefore, the orders to the company slows down. Therefore, you know, we basically see underperformance in the future. And I think that's what's going to happen in the stock market, in a lot of these companies, in private companies, exchange traded funds, all this stuff. I think it's really going to happen. So we'll see. Maybe I'm wrong. Caterpillar broke down from this key channel, just chopping sideways. Nothing's changed here. You guys know how I feel about this. Same thing with Deere. Broke down from the channel, chopping sideways, trying to save this cross. Antero midstream, chopping sideways, same thing. I think it still has further downside, like all these like infrastructure plays, clean energy, all this stuff. CX, Cemex, same thing, broke down from the channel, retesting like we said. We could easily see this come back in here and put in a new high, but I think it gets rejected, and then we get the measure move down from here. This looks to me like a breakdown from a key level, a retest of that breakdown, and then it's going to get rejected. If it reclaims this area, by all means, we're headed back up to highs. Same thing with CLF, Cleveland Cliffs, same exact thing. You know, operating inside the channel, breaks down from the channel, comes back up, potentially puts in new highs, and then if it gets rejected, comes back down. If it can hang on to this area and keep moving up here, by all means, I could be wrong. But in my opinion, it's going to get rejected here sometime in the near future. Roll back over. We're seeing, you know, a little weakness, a little strength, a little weakness, a little of this, a little of that. We'll have to see, though. It's at key level, though. I really do expect it to get rejected right here. I mean, if we look at the macro on this thing from the top to the bottom, we're at like the 618. We're at like key Fibonacci extension levels from the little high right here to the little low right here. We could easily see it come up to the 1.5 or the 1.618. Maybe it gets back up to the macro 786, 44 bucks. I mean, that's a massive move from here. I don't think it happens, but could it? Sure. If the infrastructure plan gets passed, if something changes, we could easily see this thing going up to new cycle highs, but I don't think it's likely. I think all these charts are saying the same thing. Some are just more bullish than others. Ford had nice earnings, but again, I mean, I'm on the verge of just being done with this. I'm up massively on this position. Same exact thing. Operating inside this channel. It's dabbling at the bottom of the channel. Looks like it's having trouble with the resistance, even though the support should be stronger. I think it gapped up after close today? Damn, I can't remember now. I want to say it did. If it saves this area though, maybe it floats back up here. How high does it get? It just goes to our next level at like 1750. Again, there's a nice trade there. We'll wait and see though. I'm not just going to assume. Hasbro, this is another one I'm paying attention to. You know, not at an all-time high, which is something crazy in these markets. It's had a nice run here, had some serious resistance, and then had a massive, I was already looking at this before and didn't like how the long-term chart looked. And then of course it gapped up beautifully. But we'll see. Does it hold that gap right here? If it holds this level right here, I will probably enter a position on this for a move back up to the 886, which could be a decent little move. But when I look at the this is what scared me off on this one is when I look at the longer term time frames, it does not look good. Oh, and this was a trade setup I had put in place that I was looking at, was basically a break of this level. It's having a ton of trouble at the 786, but you know, beating away at that wall, but then it just got rejected straight down to below it. So if this closes like this on the weekly, I think it's going to roll back over and we'll get a better buying opportunity on this. We're also below the slope line, and it honestly looks like it wants to roll over. And then when we go to the monthly, this is what really had me kind of like, meh. This thing looks good on the monthly overall for a longer term potential move. It's back inside the bullish control zone. It's back above the slope line. It's had all green histograms in a row for some time, and it's at a key resistance looking to break through it. So there's potential for this, but when I look at the weekly and the daily time frame, I think this is something I want to get involved in sometime in the near future, but not right now. Also, I'm pretty sure they came out and said that they had I'm pretty sure they came out and said that they were raising their prices on everything by 10%, which is good for them, bad for the consumer, obviously. And they obviously had a nice earnings beat and everything. This was obviously an earnings pump right here. So overall, I like this. I like it if it holds this level right here. If it sells back off, I like it at a key support level. Definitely something I'm looking to get involved in. I do not currently have a position here. And again, you could easily say, okay, well, there's definitely some potential right here. If we take out what was acting as support, this level through here for the last, like, you know, 7 months, you know, what have we been doing? Well, we've been just trading inside of, you know, what amounts to this range right here. So let's switch that color on that and we can just see what's taking place. Basically just operating inside this channel, you know, since, well, maybe not, yeah, 7 months, since December. So we're operating inside this channel, just going sideways. So if we have broken out of the channel, this is our retest, break, retest, and then continuation. I want to be in this trade for 30% upside, 7% downside. That's great risk reward ratio. I mean, that's over what, 4%. That's great. And we could take it right now and just take the chance on that on a coin flip. And we can take that coin flip 4 times in a row. We don't have to be right once. That's great. Another one of those ones, if you just want to enter in a trade, that's fine. But I would rather just wait and see. I want to see, does it break back down here or does this hold? But it could easily be an eBay situation where it just starts running away and we're like, shit, we should have just took a position. So maybe we'll take a small position, whatever. Definitely watching this one with a magnifying glass. The monthly chart looks like it has some serious potential. The daily chart looks decent. And then the weekly chart somewhere in between. So, and then I do like that they said they're raising their prices 10%. I like the earnings beat. You know, there's definitely some potential here. And, you know, they're involved with some key stuff. They own Wizards of the Coast, which is big time. You know, there's a lot of serious plays here, in my opinion. And Hasbro is like the king of them. So, definitely looking at this one seriously. It's not just, you know, some crappy toy company. So, not just your average toy company. And then finally, the one that everyone's been waiting for. Crypto. Bum, bum, bum. All right, so far we're holding nicely. Bitcoin futures got the 821 cross to the upside, above all moving averages, consolidating here. We got the blue slope line, multiple green histograms, hard buy signal. Hey, I mean, does not look bad right here. Does not look bad. But the problem is we are retesting our very clear breakdown of the 821 cross right here. So do we close the week above the 21? That looks good. Do we get rejected at the 21? Still looks okay. We're still very strong inside the bearish control zone. All red histograms with one potential first weekly histogram, but it's definitely showing a little life here. Definitely showing some life here. Hard sell signal, all red histograms on the monthly. The monthly ends in 2 days here. You know, I want to see us close the monthly above 37,500. I really want to see that. That would make me feel much, much better about crypto. But there's some potential here from this range, but I'm still not convinced that this isn't just triple bullish divergence on the daily playing out like we were talking about. Going over to spot markets, Bitstamp here. We have not gotten above the 200 simple, but again, these markets are a little more reactive, open on the weekends, a little more bullish. 821 has crossed to the upside. We did not get above the 200 simple yet. That's my next target here to the upside. 44,659 is a retest of the 200 simple. You know, we're in the bullish control zone. Looks powerful. Blue slope line, all green histograms. You know, I told you guys we entered into the position at, what was it, 30,675. I am still in that position. I did take some profits along the way. I did not sell the absolute top, but, you know, again, I'm perfectly fine taking some profits along the way. I have also moved some of those profits into some other shit coins. I have an Ethereum position, and then I have some other trash as well, which you'll see the charts we look at, and you can probably guess which trash coins or shit coins or altcoins or moonshot crypto of the future that I invested in. But yeah, looking decent here on the daily. Definitely liking it. But again, is this just underperforming bullish divergence? Probably. Probably, guys. Let's be real here. I will go back to the shorter time frame chart, but it's no surprise that this is our exact target to the upside. You know what? I should have just stayed on the daily. This is actually, I think the next chart is better looking than this one. Yeah, okay. We'll go to that one. But yeah, let's look at this one on the weekly real quick here. Wait. With the moving averages, we can just kind of get an idea. We're just retesting the 21 right here. Want to close above it. Still bearish control zone. This would be technically our second bullish weekly, which is the first sign of life in my opinion. So that is definitely good. But again, when we flip out to the monthly, what is this? Is this just a dead cat bounce reaction rally? You know, 3 wicks getting bought up to a lower high. All red histograms. Hard sell signal. It probably is, guys. It's probably going to be an underperforming bullish dead cat bounce. But again, we'll wait and see. So here we can see on this chart, you know, it's at my target. We did the video you guys saw at 30,675 when I was talking about, you know, invalidating the 4-hour bearish divergence. That was my entry point. We now have broken through the descending channel. We have broken through the resistance here, and we have now hit my target to the upside. I told you this was my target. I explained to you why this was my target. You know, initially, this is the area we want to get through at 35.9. Now, the next area we need to get through is that previous high right here. When we break through this high, if we break through this high, I should say, I expect us to get a powerful move up here to 45,000. So 45,000 is my next target to the upside. Next one after that, and again, that's obviously the previous support. Next one after that is, you know, 50,000, 52,000. Do I think we get there? No, I don't. I do not. I don't see anything in the chart right now tells me we get there. If we do, I will let you know my opinion. But right now, we are consolidating above a key level. I want to see this 382 level hold. If it holds, I'm bullish to the 0.5, which takes us to 43,000. You know, and again, these levels are all kind of off, but essentially the moving average, the previous support, the Fibonacci retracement, all kind of come in somewhere between, like, you know, 43,000 and 45,000. So that's what I'm paying attention to. It's like literally 43 is the 0.5, 44 is the exponential moving average or simple moving average, and then 45 is the previous support here. And then obviously the 618 at 47,000. And then we have the previous support here at 49,000 on the daily. So those are the levels I'm paying attention to. Take a snapshot, pause your screen, drop draw it yourself, whatever you want. You know, again, on the daily, we have seen obviously gaining strength throughout the range on the waddah explosion. Obviously, nice green move when we flipped over past the 0 line. We broke through that key resistance right here on the Fisher, and then obviously we saw net buying coming in on the on-balance volume. All good signs on the daily, all showing some life on the daily for the first time, and good to see. We are seeing the bearish, it is still bearish trend here based on the weekly chart, but we are seeing the selling wane. The slope line has flipped over yellow. The last time the slope line flipped over yellow, we got a nice bounce, and then we put in, you know, 2 lower lows, one by a wick and one by a close. So we have to be careful. We are barely but seeing positive volume come in based on the on-balance volume. So definitely seeing some life out of Bitcoin. Is it just a dead cat bounce? Probably. Is there still money to be made though? 100% for sure. I can vouch for that. So on the monthly looks blah. But overall, looking decent here. We just got to get through some more of these levels, but I am, full disclosure, long. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I like to lock in profits along the way, and I have done so and will continue to do so at key resistance levels. And this is not financial advice, but don't be greedy. Lock in some gains, peeps. And then also we have our, you know, just traditional stuff, you know, Stokes and RSI are at elevated levels, bullish control zone, all green histograms. This is easier for me to show divergence. That's why I use this sometimes. People see it a little more clearly on these. And then obviously people like to look at traditional indicators. Not everybody likes mine, so that's why I have this one up here. Longer we chop around in this zone though, more we invalidate this bearish looking head and shoulders. Coming out of the bearish control zone, getting some life out of this. You know, weekly is looking good, or looking decent, I should say. And then monthly still looks terrible. Still waning momentum on the MACD. Still leveling out, but looking okay on the RSI. Getting a little cross back up on the Stokes, but bouncing essentially what amounts to a neutral level. So seeing a little life out of Bitcoin. It's good to see, definitely. Ethereum back above all the moving averages on the daily. Obviously, it's overperforming most shit coins, but somewhere in between. Looks okay. Definitely some potential here. When we go to the weekly, it is hanging on, saving that 821 cross. If it stays here long enough, I expect it to go back up. Bearish control zone, all red histograms, clearly below the slope line. Let's not get too excited, guys. Monthly hard sell signal, hanging on to its moving averages. Looks decent. Better than most. I was wrong about this, though. Or was I? No, I was not wrong about this. I'm pretty sure I said the ETH to Bitcoin chart was bearish. This looks like a giant descending triangle to me, and Bitcoin is outperforming ETH, and it looks even more clearly like a giant descending triangle. Did I say something bullish about this? I don't think I did. I'm always bearish. Let's be real. There's no way I did. But it's not my fault. I just tell it how it is. Giant descending triangle right here. It looks bearish. It looks like ETH is getting ready to break down from this level. Oh, I think I was comparing it to the gold-silver ratio. That's what it was. I was saying that gold is going up compared to silver the same way that Bitcoin is going up compared to Ethereum. So does that mean prices are going up, or that Bitcoin is going down but ETH is going down faster? Or does it mean Bitcoin is going up and ETH is going up less fast? We'll have to wait and see. But, you know, canary in the coal mine here. If ETH breaks down from this level, it means Bitcoin probably went parabolic, or Bitcoin probably dumped bad. So which one is going to happen? Stay tuned to find out. But that's how it looks to me. You could argue maybe it's a flag and I'm wrong. Maybe it's going to turn into like a descending sort of, you know, channel situation or something like that. I don't know. I mean, we'll see. It's something like that. I'm wrong. I don't know. We can get pretty creative on these things if we want to. Depending what time frame you're on, though. It looks bearish here. Hard sell signal. All red histograms. Still looks good here, though, on the monthly. But, yep, that's our ETH to Bitcoin. Uniswap next. Uniswap crossed 821 back to the upside, but it did it before. It did have that same bullish divergence in place. Got an underperforming move as far as I'm concerned. We did get a retest of the 200 exponential, which was our initial target. This is one of the shit coins I entered into a position on. You know, maybe it gets up here. It's really just got to stair step up these moving averages. Next target is back at 20 bucks. And then after that, the 89 at 22. And then after that, the 200 simple at 24.75. There's a lot of resistance there, though. If this thing gets back above $25, I would be real surprised. Real surprised. And, you know, all the weeklies look like this. They all look like trash. 821 crossed the downside, and they're just trying to get back above them. But they all look like trash. But I do have a position currently. Doggy Dogecoin, again, had a nice scalp already. In a nice position here again. Took profits at 22, up like 10%. Still have part of the position open. We're back above the 200 exponential. The 821 looks like it wants to cross back to the upside. You know, we already hit basically the first target, but next target is like 23. I might have said dollars, but I meant cents. 23.6 cents. After that, you know, if we can get above all these moving averages, 24 cents, I think we get the measure move. I think we get the target of 28 cents or possibly 30 cents. But again, you know, very bearish. This one, because it had such a parabolic move though, when you go to longer time frames, it actually looks better. It's trying to stop the 821 cross the downside. If it gets back above 24 cents, I really think it goes to 30 cents. At that point in time, though, it's going to be very hard to get above 30 cents. So if Bitcoin starts going parabolic, though, by all means, me and all the Shiba Inu Doge millionaires will be rejoicing. But I doubt it. Chainlink, again, another position on this one. 821 cross, got a nice move up here. Took some profits already along the way. Potentially going to take more profits at these other key levels. I'm really looking at, if we break above this $20, $20.50 range, I think $22.60 or whatever, I'll take some more off the table in that range. And then again, I'm looking for a hard rejection up here at like $27. Could be wrong. Could go absolutely parabolic. I'm sure I'll still have some on the table, but I'm not going to get too far ahead of myself. I'm taking profits along the way. To me, these are just scalp trades. These are all just scalps. You know, $23.50, it's going to be very, very difficult to get back above like $25. So looks absolutely terrible still on longer time frames. But again, full disclosure, I do have a scalp position open. Same thing here again with Polkadot. You know, entered a position on ... Took some profits here at 1480. It ran up slightly higher than that, got rejected. The 821 are crossing to the upside. I do still have an open position on this. I am still playing the daily bullish divergence. I do still expect a potential move back up to $16 or $18. It's going to be difficult to get above $18. If we break above 18, next target is like 2021. After that, you know, 26, 26.50. I mean, these ones are underperformers, though. I do not expect them to just start going absolutely parabolic. It's going to be very, very hard to get above $25 on this thing. And if we switch over to the weekly, you know, this thing looks absolutely terrible. You know, it's going to be tough to get above 8 at $17 or the 21 at $21. Could it happen? Sure. Am I still in a position? Sure. Am I taking profits at key levels on the way? For sure. Same thing with XRP. I have a current open scalp position on this one. You know, it had a nice move up here. It looks decent. It's up at 70 cents, got as high as 74 cents. I took some off the table here at like 72, I think it was, somewhere around there. You know, still have an open position on this. It did already hit the 200 exponential and simple. Did already cross the 821 back to the upside. It did have, you know, triple bullish divergence on the daily. I mean, there's not a lot of resistance moving average wise above its head. If it gets above 77 cents and closes up there, I mean, there's a ton of resistance back here, but I think it could easily run back up to $1. At $1 though, I'm done on this one. I don't think it gets back up there. If it does though, that is 100% a selling opportunity for me. I mean, I'll be taking profits along the way, but it's trying to stop the 821 cross. It already happened, but looks bearish. But again, if Bitcoin keeps pumping, the shitcoins are going to keep pumping too. So, all right, this one is severely underperforming on the recent moves here. I do not have a position in this. This was something group member asked about. It did not get the 821 cross back to the upside. It cannot even close above the 8. This one looks bad to me. It looks worse than all the other cryptos. It has not technically crossed the 821 to the downside, but I think that's really just because it went so parabolic. But this looks like a hard rejection to me. I think people are hard selling into this pump right here, so it's not somewhere I want to be. Cardano beads, I mean, looks okay. 821 cross, it's back above the 200s. You know, if it gets above $1.33, you know, it's going to run into resistance at $1.46. After that, around like $1.80. Do I think it gets there? No, I think Charles just dumps on all his peeps, dumps right in their mouths, right on their faces. 821 have not crossed the downside. Still looks decent, but all red histograms below the slope line. And, I mean, the most bearish part of this whole thing is Charles. One word, guys. Chucky. No, that's not it. Charles. Charles. And if there was a second word, why I will never own Cardano and have no interest in it. Charles. And then the second word is Hoskinson. Bitcoin dominance. You know, it's getting that move to the upside like we expected. This is a weekly. You know, pushed up exactly to where we said. It's still a little shy. We said 49.60, I think. After that, I expect a rejection, consolidation, and then a burst up to 55. I mean, this thing is doing what, blah, 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 blah. Look at any video I ever did. Same thing it always does. Whenever it turns green, hard buy, green, hard buy, green, hard buy, green, hard buy, green, hard buy. Expect 20 to 30% move to the upside. And then after that, we'll wait and see. But yeah, you know, it's the same technical analysis. The weekly charts, nothing changed. We got the exact move we expected on total market cap back up to the 821 cross to try to retest them. We were waiting for that to happen. We bounced the 55 perfectly exponential. We are looking like a slight rejection, but if we close this weekly, up here above this and cross it back to the upside, it's going to start looking good. These levels are going to start looking good. It's going to be very hard to get above 1.6 trillion. But if we do, my next target is 1.77 trillion. And I think that's going to be people diversifying back into alts or shitcoins or moon coins. But yeah, starting to look decent. Still not good though. Coinbase got a little gap up, got a little sell off. Look, crypto is doing this little thing. It looks good. I'm still not too excited about this. It's trying to cross the 821 back to the upside. Last time it got a hard rejection right here. If we start closing above the 55 exponential, I might take another position back in Coinbase. But right now, I'm not interested in any of these. Riot, same exact thing. It's just doing what Bitcoin does. Nice little move up here though. MicroStrategy, Michael Snailer. The slime bag, leaving a trail of slime wherever he goes. Same thing, same chart. Not interested. GME, Game Stonk. Oh no, guys, we're doing it, we're squeezing the no. It's getting ready to roll over. See GameStop at $136. I think I put a target into place here. Oh no, maybe not. We can let's put a little box on here so that everybody knows when I'm right. There we go. There we go, game stonkers. You stinky stonkers. I thought you had diamond hands. No. AM, see your ass later. This thing's holding on a little better, at least, but I mean, you already know. I think we're coming back down here. I mean, these things are meme stocks, and I don't know. Maybe if another stimulus check goes out, people run to these. But I really think that we're coming back down. We're going to retest 32. We already retested the 30 range. We're getting rejected. We can't close above the 8 right here. So we tried to get above the 21. Couldn't do it. Try to get above the 8. Maybe we do it. maybe we sell back off. I think, man, I may have to look at the puts on this thing. I think it's going to 26 bucks. I really do. I really think this thing looks like it wants to go to $26. Let's put a fib in here from the top. Came back up to the 382 and got rejected. Yeah, we'll see. Tried to get up to the 0.5 but couldn't get there. We'll see what happens. What if we do one the other way? So I'm saying from this bottom right here to this rejection top right here. And let's look and see. Yeah, that's basically at the 1.5 Fibonacci extension is the 886 of the macro extension to the upside. And that extension to the upside was the previous high to low. So yeah, I really think that was the 1.216 of the previous all-time high. We can go back and look at it. This was all the way from here, fib down to the bottom, and it topped out at the 1.236. And then it came back down basically to the 1.0 to see if it could hold that previous resistance as support. So now here, the retest of that one is right here where we found support. So if we hold this, it could easily go to the upside. If we break down from this, I think it goes to the 886 or somewhere around like the 1.618. So I think there's a good possibility. I'm going to get that out of the way. It comes down somewhere around there. So we'll wait and see. Maybe these dudes do have diamond hands. I heard it was going to 1,000, and then I heard 10,000, and then I heard 500,000 per AMC stonk, guys. So maybe we should buy one just in case. Not. Bed Bath & Beyond, you know, broke down from our key little triangle here. It's coming down to the bottom here. Maybe it gets another pushback up, but it's coming down to 23, 24 bucks. Buckaroos. Newegg. Oh, I didn't even see this. Look at that. Target hit. We did it. Guys, we did it. We hit the target perfectly. Yay. We put the support. All right. So I guess we'll put a new target since we hit that one now. Where's our next target? Well, I mean, it's so obvious, but it's just our previous support after that. And then y'all Neweggers better pray to God. Man, I better not say that anymore. Neweggers? That could be misinterpreted. I don't like the abbreviation for the Neweggers. We got to come up with a different name for you guys. If we break down from that one, the next support at 1680, and then after that, y'all better really hope this thing doesn't come back down, because you're looking at like $10. The old $10 holla. God. I mean, there's 1 day of price action holding it up right now. Or I'm sorry, 3 days, because we have 2 days from here plus that little burst. So we got 3 days worth of people that can hold this next support. I imagine it gets a bounce from here, though. Honestly, it's got to get a bounce from here. Or does it? God. Down 15% today. Sorry if you're a Newegger. Guys, can you tell me what the real nickname for the Neweggers is? So I don't get fucking banned for some kind of illegitimate accidental racial slur. DraftKings, seeing a little positive price action. Trying to save the 200. But when we go to the weekly time frame, it does not look good here. 821 cross, we're trying to save it, but I think DraftKings coming down to like 37 bucks. 37 DraftKingaroos. We did it! Guys, we did it! We made it to the end! Hooray! 2 hours and 59 minutes. You get 47 seconds to say your goodbyes. I will fully interact with you in chat for the next 47 seconds. After which, peace out. But yeah, let's see what you guys had to say. Good night, broski. CW, thank you for the insights. Yes, dude. Thank you for always being here. Thank you guys for all the positivity, all the support, all the love, kind words, and everybody supporting the trade group as well, and everybody learning. I hope you guys are learning tons. I know you are. I can see it. And I like that you guys are patiently waiting with your fingers on the trigger, guns still in their holsters, waiting for the perfect opportunity to draw. That 12 o'clock showdown, that high noon, about to get them dollars or euros or whatever you guys use out there, because I know it's an international group. Definitely appreciate all you guys. Make sure you take care of your family, stay safe out there, eat healthy, exercise, make sure that you are staying positive, make sure that you are loving your family and those close to you, and checking in with those that you're not seeing regularly. Heart goes out to all you guys that are struggling right now financially or mental health right now, or have family members struggling with any of those things, including gambling, addiction, whatever. Make sure you reach out to those people, be their safety net, show some support, love your friends, love your family, love your neighbors, love everybody. Take care of yourselves, guys. Appreciate y'all. Thank you all for tuning in. If you're watching this later on, make sure you comment. I do appreciate it. I love hearing from you guys. I love all the gratitude I get for putting in the time on these videos. I know that there are a bunch of you guys out there that appreciate it, and I appreciate that you guys appreciate it. I literally would not do these long streams if I didn't think that people were benefiting from them, because honestly, I can put out, my channel does better when I just put out 4 15-minute videos, every couple days, but I enjoy the live streams, and I feel like I know from the amount of time that people spend watching them that they are legitimately watching them to learn and to see, the techniques and why I'm doing things, how I'm doing things, and what we're looking at. And I think that that is extremely important, because honestly, I would rather have a couple people learn something than a bunch of people just use my technical analysis to make money. Because in the end, I want each and every one of you to be completely self-sufficient. I want you all to be able to provide for your families, for yourselves, and for your posterity on your own independently. And the way you do that is by learning to trade these charts, learning to do technical analysis, learning about fundamentals, technicals, all these techniques, etc., the correlation, the causation, how these things are tied to each other, how complicated these markets are. But when you legitimately break it down, you see what the market makers are doing, you see what the market movers are doing, the whales, the algos, you see what's really going on here, and it all just starts to clear up. All the fog goes away, and in time, you might not be right on every single trade or every single investment, but in time, you will win. I also want to touch real quick, actually, one of my group members had specifically asked about, how do you know when is the time to go full-time? How do you know when you have enough money, or when you need to quit your job or whatever? And for me, my advice for everyone is wait as long as you can. Wait as long as you can. The key is you want to always have income coming in, because then you don't have any stress to trade. So when you're consistently trading and consistently making profits in bull and bear markets, that's step one. When you're able to consistently make profits and withdraw money from your trading account and put that into investments and pay your bills with it, that's step two. But you don't want to have to feel pressure to take money out of your trading account to pay your bills with, or feel like time is a constraint based on investments or trades because you need that money to pay your bills and you're too heavily invested in your trading account or your investments or speculative assets, whatever, because that's going to put extra stress on you. And then what happens is you pull money out because you need it to pay bills, and then the trade goes in your favor, and then you wish you didn't pull it out, and then you start kicking yourself because you need that money, and then you start getting reckless because you just don't want that extra stress in your life. So if you can figure out a way to have a consistent income through trading, or through some other side hustle you have, or some other business you have, or through your job, but still trade consistently and still put in profits, that is what I like to do. That's what I think is the best thing to do. And then over time, once you have consistently made money through bear markets, through bull markets, through every possible sideways consolidation for, in my opinion, what should be years, of trading and investing, then you won't have that same stress. You know you're doing things right. You know you're successful. And then you can step away from everything else and go just full-time trading only. But in my opinion, the best thing to do is always have income coming in, because then you don't have to worry about hurting your trading account. You don't have to worry about taking money out of your trading account, and you can consistently pay your bills with that side hustle income or, passive income or whatever. And then you can also have consistently be putting money into your retirement portfolio. And you could do that, any of those things. You could do it with the side hustle. You could do it with a part-time job instead of your full-time job. You could do it with, investment properties. You could do it with stock dividends. Any way you want is perfectly fine. And you can do it with a combination of all those things: rental properties, stock dividends, side hustles, whatever passive income you can have or whatever, and then go full-time trading. That to me is the best case scenario. And then eventually maybe it's not worth it to do rental properties. Maybe it's not worth it to do, or you just reinvest your dividends because you don't need that money, whatever it is. But the most important thing is figure out a way to make sure that you don't put any extra stress on yourself when you're trading, because the best case scenario is a no stress trading environment, so that there's no extra things pulling you or pushing you in the wrong direction, like time situations or monetary commitments that you need to dig into that. Because you don't want your trading account to go down by losses, but you also don't want your trading balance to go down because you have to constantly be taking money out of it. Now, if you have a situation where you're constantly making profits, so you're taking away from it and then you're paying bills, or you're investing in a long-term, investment account or whatever, that's completely fine. That's totally fine. My situation is great because what I can do is I can just take whatever money I make in my trading account, and then I take my excess, because I don't need my trading account to be any larger, and then I just take the excess and then I just put that into, basically my savings account, which is physical gold and silver, or my investment account, which is my long-term portfolio for whatever, crypto, stocks, etc. And then, I don't have to worry about any of that. I don't have any stress that I need to make so many trades. I need to make such a percent, because otherwise my account's going to get smaller, and then slowly over time it gets smaller and smaller and smaller, and the percentage I need to make goes up and up and up, and then eventually it's bad, and then you don't want to have to go back to your regular job, whatever, etc. So in my opinion, wait absolutely as long as you can. That's what I did. I waited forever. I did side hustles. I did jobs still. I did passive income. I did everything possible to not be reliant on the profits from my trading account. Took all that stress out of my life, and then after that, it's a cakewalk in my opinion, because you can just put everything aside and just use your technical analysis or just use your fundamentals for investing, and you don't have all those extra things pulling on you. You don't have to explain to your wife why you got to be tight this month because you had a bad month trading. You don't have to worry about your trade balance going down. You don't have to worry about if you don't make so much money by the end of the month, you're going to have to withdraw money from your trading account, and then you're going to have less to trade with next month. So it's going to be even harder to get ahead, etc., etc. So, because in my opinion, things go parabolically to the upside when you're doing good and you're making good decisions. Things go parabolically to the downside when you're doing bad and making bad decisions. The best thing to do is grind your ass off for as long as you can at whatever job or whatever income you have, as long as you can. Stack cash, stack cash, stack cash, pay your bills, put money in the bank, have everything set up, make sure you're successful for years through all different environments: bullish, bearish, sideways consolidation, etc. And then after that, when the time is right, you will know it, and you will finally be able to make that decision on your own. This is obviously not financial advice. I am not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. Do not gamble in these markets. Take care of your family. Take care of yourself. Eat healthy. Exercise. Crypto Trend Trader. And I'm out of here.